tunes. And we're live. So it is Thursday, October 6th, about 1 o'clock Eastern. 10 minutes to. I tried to do a stream last night, but didn't have the. I had something wrong here on my. It wasn't. It didn't go. For some reason, it didn't go live on the screen. It only got the mic. So, I'm gonna do my best to explain some of the stuff that I did on that stream, and also hopefully get some more action so we can do it live. But let's just take a look and see what we've got so far. So yesterday, the settlement price is like basically where we are right now. Right here. 624 maybe. We traded higher over yesterday's high. You can see that we had this to contend with. Ran into resistance after taking the liquidity up and then consolidated on top of the previous day's value area high. And so if you're going to get like an extreme move, it's got to happen right there. But those are actually really rare. Everyone wants, well, not everyone, but retail wants this because they see this, right? And they miss it. And they're like, oh man, I missed this exponential move. Okay, I'll just catch the next exponential move. Well, believe it or not, exponential moves are like by their nature not very common. So when you get something like this, when you get something like this, a move like this is actually really hard to do. The more likely thing to happen is to get a 61.8% retrace, which is pretty much what we got. Turn it back in here into the single prints, right? Which on NQ ended here. We could even just put a line there. Oh, I don't want it to be purple though. That's the POC. Make it yellow. Okay, so pre-market during London, traded through into the single prints. Right, back into this. Did it fill the single prints? I mean, it depends where you count them from. But if this is the entire, we had previous resistance here that basically became support, and then pre-market came all the way up here to try to get this liquidity, and you can see they failed. Now, when this happens, when you get this close to a high from like a previous session, or in this case even better from like the overnight session, the London session or whatever, if you get that close and you fail, your assumption should be that there are probably stop orders up here and that this area will eventually get tested, but that we either ran into news or else ran into another sell program. And so the question then becomes, are we consolidating, right? Is it lower highs and higher lows coming? Or are we actually starting a downtrend and we're not going to come back and get this liquidity for quite some time? The only way to know that, as far as I know, is to evaluate volume and how they respond to this drop. So you can see a lot of the volume happened at the highs up here. A lot of the volume went off up here. So it's either easier to do this on Sierra, but for those who don't do Sierra, watch this. Okay. So on the high volume node up here, right? If you've got the footprint, you could catch this. But there's a high volume node up here, and then the POC of this entire zone, including the open, is back down here. So now if you look at that value area, that between the light blue dashes, that area is going to be very, very easy to travel through for the time being. Basically, the way to think about it, everybody agrees that price doesn't belong in here. This has already been auctioned. It's considered fair value. The only disagreement is up here or down here. So if you want to make this really simple, once you've got this kind of situation where you've got a lower high and a higher low, all you really have to do is figure out where it started, right? So this, I'm going to call this impulse move, and then this is where the consolidation started, and then we're going to go to the next higher high. So, or sorry, lower high. If you extend it further, it's okay. It's you can extend it all the way and get more information, and that will, but you have to accept that these are going to get run. You're going to get this, right? So this is technically the way to do it. Is just to continue to take the volume until you've confirmed outside of it, right? But our trades should not be initiated in here, right? In general, and if you see the 11601 level is a voodoo range level, so when we are orbiting around a voodoo range level like this, you have to avoid entering. In general, at that location, you just don't want to do it like this. It should be where you're taking some profits, not where you're targeting. So like this whole area here should just be like off limits, and you could literally just like turn it black and like not even look at it, and you'd be fine. Like if I just told you like don't trade that, like you'd do okay, right? So that's an important lesson that it's taken me a long time to learn, is that once you identify where the agreement is, which is right there at 11600, 11601, just stop entering trades there. Like even if your signal's fired, just ignore them. Because even though you might get 10 to 15 points, right, you might be right, there's going to be so many times where they sweep your stop and then roll over, and you're much better off attacking the edges in this kind of negotiation when we are orbiting a voodoo range level like this. The expectation here should be that liquidity is going to get swept up. So the next question is where is liquidity? Well, one place to look for liquidity is down here at 11.51850. There are probably stops that long traders, intraday traders, put in down here. Very likely. Notice that we did not trade under the Globex low on NQ. We did in ES though. So it would not surprise me one bit to auction this low and swing underneath this and see if we get any capitulation or if sellers exhaust. So that should be expected. It doesn't have to happen right away, right? It doesn't have to go there right now. But expect that to happen. So like if I was a swing trader, or if I was looking for a swing trade and I was bullish, what I would really want, I would not want to be executing any orders in here. I would want to see them pull down here and try to take this low and see if we can get a bounce underneath it. And then on my target, I would take most of my profits back inside this value area of the consolidation because I don't know if it's going higher. But then my ideal target, like for the runners, would be to take liquidity on the other side. So where's liquidity on the other side? Well, there's two spots. One is anywhere above the value area high of this consolidation. So all of these little wicks, those are your short entries basically, and your exits. And this one was great, where your exits are for your longs. And then the primary place where most of the liquidity is actually above the previous session. So London's high. Now London's high was here. We already got that. And I realized that Globex high was up here, but Globex and London are Asia. You have to see Asia, London, and the US session as, okay, you don't have to, but I would suggest that you view Asia, London, and the US session as three separate sessions because the participants are different, right? The participants are different in each session, And what you generally see is when sessions end or when they switch, right? Because they never really end. They just go to they roll to the next one, right? Asia has an overlap with London. London has an overlap with US. So it's not like they just end. But when the new session starts, which was here at London, right? 2 o'clock, right there. Or I could say DAX too, right? Just the Europe session. That's the high that the algos want to take. And they do. They get it, right? So technically, their job is done. The algos that suck up that liquidity, their job is done to the upside. So that makes me less bullish. Okay? Because they've already taken that liquidity. I know there's liquidity up here, but the only other place we should really, the Asia session is separate. The only other one high we really should be looking for here is the RTH high, and that one was beat in Asia already. It was beat in London, and then it was beat again in RTY, right? And each time we found sellers there. So this high here is actually more important than the 24-hour high, in my personal opinion. This high matters more than this high. Why? Because there's more participants here. I mean, you can just look at the volume. That's kind of obvious. But when we come back to it, if you're trading RTH, this high is very important. Yesterday's RTH high. As is London's, which was because London is still going on. See, by the time we get here, all the participants who put in this high, if they were trading the Asia session, they're probably the ones who matter. I'm not talking about retail. The ones that matter, right? The big funds that like are active during that time and we're like hedging. Like, think about why you get these moves, right? Some big, I don't know, investment fund like a it could be anything, right? Sovereign wealth fund, whatever. They decided to hedge with futures, which brought price down. Well, for them to show up again, we're probably gonna, that market is gonna, wherever they were active is gonna need to be open, most likely, because if they're a big fund, they're not going to be like trading 24 hours most of the, like they're not going to be continuing to fill orders, and they're not going to be like shaken out of their position unless they are stopped out, right? That's different. But I'm talking about like whether or not we should expect them to change their mind up here, right? In other words, if price, how can I explain this? Okay, so the guy got short here. Think about it. It can be whoever you want, right? Someone in like Asian country that has a lot of money, right? An investment company that is on the time zone of China, right? Or Hong Kong or whatever, Middle East too, right? After they get this high, they pushed it up to the high. You can think of it as like 2 if you want, whatever. It doesn't matter. It's obviously more than 2, but someone pushed it up to the high. A seller was waiting there and took it down, right? London tried to buy it or DAX tried to buy it, and then London started selling too. So this guy got it started. The London guy got it where it needed to be. During this, we had Asia close. Okay? He probably took some profits, the guy that sold up here. That makes sense, right? London guy then has to take some profits. That makes sense. Then RTH opens here, right? And London is too short. Inventory is too short. We don't have enough inventory for the demand, right? There's too much supply. So what's the effect? Everybody buys, right? Buy. They cover, they enter. They take the liquidity up here, testing the market above the London high, and more importantly, above yesterday's RTH high. And even though Asia now, China, is closed, which is where this guy showed up, London here is still open. And London, whoever this guy was, you can assume that he showed up to defend his position. Now, they did trade over his high, right? But he defended it. It's not like they have a 5-point stop, you guys, right? These are big funds. They waited for it to come up here. They liked to sell it. They were a seller here, still a seller here, right? They probably made money going down, covered some, sold it again. It makes sense. Where should it go? Down to the bottom. Okay, and we already talked about that. Now, this process, the entire process, can be thought of, can be seen as a distribution of volume here with the volume profile. And you can see that the majority of the volume is in here, but we had a spike in volume up here, which you can see more easily on a smaller time frame, which I'll show you in a minute on Sierra. What does that mean? All of these buyers up here and anybody who bought this spike is trapped, right? And so the result of that is they flush looking for liquidity. Well, they got this liquidity, but they couldn't get this one because ES swept below the low on ES. Here, I'll show you. The reason that didn't get taken out is ES had single prints back here, right? Globex traded, or I'm sorry, London traded into it. We couldn't get above the London high. It's very different. Couldn't get above London high on RTH, and they rejected. And what did they do? They took London low, Globex low, right? Filling these single prints, depending on where you start measuring them. But I guess it depends how you start measuring them. I'm looking at it from over here, right? So at a higher time frame, there was not single prints here. But if you from this time frame, they technically did not fill the single prints because it would have to go to here. But whatever, they probably got about halfway there. But this is the part I really care about, and they did fill it. Came right back to this support, right, making kind of like a head and shoulders sort of weird bounce attempt, triple bottom or something. And then because they traded under here, right, they found liquidity there and they got to this old support, they bounced, and that caused NQ to bounce even though they hadn't sucked up the liquidity. So when the sellers show up here, the target is to get to the low. They just didn't make it there. And there was a great trade there. We got a wonderful setup. At least one person in the room caught it, which is great, right? Where should we target? Primarily back to the midpoint. We should measure the volume up to that point, find the midpoint or the POC of the volume, right? And target back into there. So any of this, and especially if there's an LVN right above it like this, that's a perfect place to take some profits right there. Perfect spot to take profits if you bought down here, right? I realize it went higher, but 11,600 would have been a great place to take some profits. And then the other place to take them would be any test above value area high, because these then set up shorts. Comes back to 600, or sorry, comes back to one voodoo range below 600. So if you want to buy this, if it's set up, it's not too bad. It didn't cross the value area, but it's okay. Did the exact same thing here, so now we're kind of consolidating, right? So one of these is going to get broken out, and then we're probably this one, and we're gonna see a flush of both of these lows, if I had to guess, right? That's my assumption. That's my expectation. But you can't trade with just that, right? We need actual setups. We're going to primarily be looking at the 24 tick. And I'm using a new way to identify locations. The trade entries are all the same, but it's a new way of identifying locations that I introduced yesterday night. But like I said, the recording didn't work out. And I will explain it as we go. Let me just mark some of these areas, because if they show up with a trade, I'm just going to take it and explain it afterwards. Missed that one. Okay. So traded above, traded below. So we need a test into here to get a high odds trade. Otherwise, we got volume below here. It might not set up. It might not set up. Where's the volume here? I might have missed it. Right here. This is really what we wanted. Okay, it's way up here. Okay. So the volume build is here. I may have missed it, you guys. Giving a morning review, I might have missed the short. We'll see. We have this one. That's been. Did this get bounced off of yet? Oh, interesting. Okay. And then, do I want to keep these old ones or not? traded below it, tried to reject, failed, traded above it. I think I might need to keep that one too. Let's see. So basically we have three areas. This whole general spot down here is support, right? We've developed volume above support, and if it's still bullish, what we should see is that getting back into here and then finding aggressive buyers would push price higher. That's what would happen if it's bullish. I personally don't think it is, but it could be, right? And because they protected these lows and then got a higher low, and we have these purple backgrounds here, we traded above them and then returned to them. If they bounce, and then that's technically your entry. The problem is we had the exact opposite situation up here. We got the pink, got volume below it, so that means that if we come up here and reject, that's a short. So what we might end up seeing is balance, right? From here to here to and then back. That would make sense. And then back up like this, right? That would make sense. And I'm still kind of learning how to interpret these new signals, so I apologize if I'm a little slow explaining it and setting it up. But in general, what we're basically looking for is usually, I thought, the most recent pink like this or purple, but it looks like it can also be like the lowest or the highest. We're looking for volume to get like beyond it or behind it. Okay, now we got to mark this one. So in other words here, we'll explain it right here. So we get a bullish bar with a pink background, right? Generally, especially because it's a pink bar, that is a sign that they are trying to shift momentum higher, right? It's not a buy signal though, but it's a sign that they're trying to shift momentum higher. The interesting thing is that if we can trade behind it and put volume behind it, and then they hold on a retest, that short has a really, really high win rate. As long as I get an entry based on the trading perform entries I'm allowed to take. So it identifies the location and the time. Now the problem is that 11,600 is the exact spot where I said we really shouldn't be trading, right? Because it's right in the middle of the range. So we're going to see a lot of choppiness here, and I may not take them live. I might just kind of like paper trade them in my mind to see if they're working, because I don't know how reliable it is in this choppy area. So on another screen, I've got this still, right? And I'm watching to see if we can exit this area and either, like I said, get down here for a bounce back up, or up here for a drop, right? Yeah, I don't care which one we get. What I don't want to do is diddle in the middle too much. But if you look, I mean, this did set up. This did set up right here. We got the entry at 02 something, 03 let's say, and it's now gone to like 30 points almost. What I'm watching is this zone right here based on this pink background. Now it's only the first pink though. When we get a string of pinks like this, the first one is the most important of the pink backgrounds. It's the very first one because it's the low that we need to get under to really be bearish. We need to see them get under this low and develop volume below that low. Otherwise, we need to see them test into this range and reject with a setup. That would be an ideal short if the location was right. We're about 30 points from the absolute no trade zone. This one was like 2 points from it, so this one was like definitely a no go for me. Not because it's not going to work every time, but it's not like I can just like inverse it, right? It's just that it's going to be choppy. And so the likelihood that I'm going to get like a 50-point trade there is really low. while I don't need 50-point trades to make a good day, I don't really want to be getting into trades at spots where I think the chances of a 50-point trade are like zero. So that's the way to think about it, in my opinion. But you can see that the other side of this is that when they print these pink ones, especially a bunch in a row like this, and not just one, the momentum is increasing to the upside, making this low, that 11,606, harder and harder to develop volume underneath, which is why the setup works, because once they do that, you know that the momentum, like they've been trapped, right? But when they've got this momentum and they can't push it down, I don't think we should expect 11,606 to get broken, making a short here not so great, because it probably would get stuck. And so that's where I'm trying to figure out like how long these ranges should be like respected. But like here you see this this one here goes all the way back to here. It was the first one, the first purple on this down wave, right? And that down wave was huge, right? And I think that matters because that's kind of a new idea. That's the down wave. All the volume was at the low, right? We got this beautiful setup with the double arrows. An arrow, get underneath, come back up, blue arrow again, up, and you're breaking above the lowest purple background, and that is a great trade. And this right here develops volume, right? We get the yellow line above this important range. Therefore, as we pull back, any bounces here can be bought. And then we got this, so they tried to put momentum, they got trapped. You can immediately short that as long as you have risk reward. Where does it come back to? That range, right? Where they started getting bearish. And they bounced, right? So if it was a good location on this chart, if it was a better location, that trade was valid. But I don't like trading right here, personally, because it's right in the middle of all that consolidation. And a lot of times, like you'll get long on this star, it'll come right back. It'll come stop you out and come right back again. And if you're gonna trade it, you trade the second one or the third one. You don't trade the first one, right? But I would just prefer just not doing it because I don't think it's gonna get past this very often. Most of the time, if you want to be bullish, you wait for this to, like, let them fuck around in here and then see if they can come down here and bounce off this one. Maybe after going under the low. That's preferable. But if you're aggressive, you can trade whatever the hell you want, right? As long as you've got it set up. And it was a setup. Okay, we got a yellow arrow here. See that yellow arrow on a down bar inside of the channel. These ones are outside of the channel. They're much more relevant. This one's inside the channel. So this one they might be able to trap him. So I can spread this out because now this up wave has a yellow arrow on it on a bear bar. So let's see if they can trap and get some volume up here. The pink bar does not count. It's got to be a non-pink bar, preferably with some volume, which is this one here. This is accumulated volume. You can see we're not doing a very good job of accumulating any volume. You can also see on the smaller time frame, the zigzag here went lower, 64.50 points to 43.50 points, but it only took 3 minutes versus 16 to go up. So it might not be done, in other words. Yeah, see, so they yeah. On this small time frame, you saw a pullback. On the time frame we trade, it was just a wick, you know. But on the smaller time frame, you can get some hints about trend strength based on what these waves look like from one power bar to the next. These little sideways triangles are what creates these pivots. You don't know where the triangles, those triangles don't show up for about 2 bars, these ones. That's the only one that's delayed. But they're not used for immediate entries. They're used to identify locations. So like right now, it draws a red line because if I trade above that and then roll back underneath it, it's actually a really strong trade. Okay, this one might be short here. Traded back into that zone.
Order filled.
Okay, we're gonna go ahead and take the first one. Sometimes you need 2. Sometimes you need to try this twice. But we're gonna give it a shot. It's not an ideal location, but it is valid. So my stop's gonna go to 38. Shit, come here. We're just gonna try to scalp this. I have no idea how strong this is because of the location, but we're gonna just kind of play it by ear. They may need to steal my stop and then roll it over. Well, we did develop volume down here. I would have preferred this to be an orange bar rather than a star. This is not the highest odds entry. It's a little bit aggressive, but like I said, I've got to execute these eventually. So it's important that I practice even the scalps. It's okay if it doesn't work, because I know how to handle it if it doesn't work. It'll just stop me out, and then it may give me a chance to get back in. Otherwise, I know not to short it. But what I want to know is, since we bounced off this, are we now going to come back up here and reject and come back to it? And I'm guessing that's not guessing, but from my experience, my hypothesis is that it will. What I don't know is it going to need 1 test in there, 2 tests in there? Is it going to need to go over this high and then roll over? I don't know. So all I can do is just wait for that aggressive reaction to price getting in there and just fire or don't. You know, I just have to decide, do I take the first one or do I wait for the second one and risk missing it? Well, I decided I will take the first one and then play it by ear and try to take some profits on the way down, potentially get out of the move, and then if it sets up a second time, I might be able to try it again, but I don't know if it's going to work. I mean, you never do. But for anyone who's new to this, like, don't get overwhelmed by like all the signals and stuff. Like, you don't need to know what they mean. It's just to identify whether or not there's an entry and whether or not there's a location. So like, it's a matter of like pattern recognition. It doesn't matter really how they're built. You don't need to know that. You just need to know that you only want to enter at the location that you want, and when there's a star or on a colored, an orange or green colored bar, basically, or a diamond. Then other than that, everything else is just built for alerting whether or not, to determine whether or not this location is valid. But the trade entry needs a diamond, a star, or a colored bar that's not pink or purple. The pink or purple bars confuse a lot of people, but those are not entries. But they're a very important piece of the puzzle for determining entries. Usually we want purple or pink bars followed by the sign of aggression in the opposite direction. So pink going up. Same with the triangles. Triangle up followed by star is much stronger. See, triangle down followed by the star. It's the star that's the entry, not the triangle.
Target filled.
There we go. Now, I don't know if we're going to get through this VPOC. On the way up, this is the VPOC. I have no idea if this is going to end up holding as support. It might. So if we sneak under it, I will go ahead and take another bite. There's always a chance that we're just going to roll down, but like I'm not very confident that's what they're doing. And I totally want to bail on the trade, but I've already gotten some of my risk off, so there's no real reason to like be scared. Like, it won't even cost me a full stop if I'm wrong. You know, so like, why bail? Like, it was a valid entry. I want the information and I want the experience to teach myself to take the valid trades and hold them. Um, the result of losing this trade is like not as bad as the psychological effects of me bailing on a trade that works perfectly. That frustration of fucking up the execution is what's messing up my trading more than anything. It's not the stops, as long as they're valid. Taking the stops when it actually doesn't work, it's like it's so rare that it happens. Well, I mean, it happens, but like it's supposed to happen sometimes, like it's built into the system. So as long as I keep taking the trades where I'm supposed to be taking them, like I usually come out ahead anyway, even if I hold throughout the whole thing and take a full stop. And in this case, I don't even have my full size on anymore because I've already hit some of my target. I've already taken profits, right? So I've only got a partial position. So if it was valid when I got in and there's no buy signal, there's no reason to bail on the trade. Despite it like struggling here, right in that spot that I said was like suspicious, that I thought might turn into support, like it absolutely could stop the rest of my position off, right? But the psychological effects of not holding it when a valid trade works perfectly is super detrimental. Like I need to teach myself to hold the trades that are valid, even if they're going to stop, because I know that some of them go for 30 to 50 points. And I will never catch those if I bail at the moment that they look like they're not working. Or that the moment that I got this intuition that this is probably not going to work, right? Like, I can validate those feelings, but I don't know what's going to work and what's not. Like, the algo is way better at figuring out probabilities, and I've got the backtest of the algo. I don't have a backtest on my intuition. I have no idea how often my feel of like, yeah, this is probably going to stop. I don't know how often that's right. Like, do I, only sell 50% of the times I get that feeling? Or, right? Like, I have no idea what the optimal way to do it is. So you just, in my opinion, the only way that I can handle it is, like, you can note it, but don't act on it. Because when you're wrong, it's going to, and the algo was right, it's going to be really, really, it's going to have a negative psychological effect. But like I said, the fact that we can't break under this important pink bar, it probably means we're going to get stopped. And the location was not ideal. I really wanted it to get up here. But it gave me a valid entry, so I'm going to take it. That's the way I think about it. And I did get some of my risk off already. So it's like, well, whatever happens at this point, it's just how it goes. We are short 5 left out of 8. There is some merit to adding back the 3 when it just technically like re-triggered because it went back to that area and they rejected it. There is merit to shorting that again. Like the 3 that I got off to take it again, basically the same exact trade. My coach does that all the time and makes a lot of money doing it. Because what it does is, especially if you're nervous about whether or not it's going to work, it gives you an opportunity to actually take more profit out of the trade, even if the trade doesn't extend. Because like now I could take like 3 more off and like make enough to cover my entire stop if the rest of the thing stopped out. Okay, so if it breaks through this low, I'm going to go ahead and take a little bit more. I might just have to mark it out. Hold on.
Target filled.
Okay, so I've still got 2 more, but the reason I took profit there is because we have this established support. We've got a VPOC on the way up. They settled it here, right? And we snuck below this little low. So it makes and then we got that 601, that voodoo range level right there. So they front run those all the time. I used to be taking profits right beyond it. I'm learning to front run the levels. I share them with everybody. So retail traders have them. And then I know the algos have them because that's how I find them, right? So if the algos are lining up here on the DOM, people are going to start front running them. So I'm going to have to front run my levels as long as I keep sharing them. But the primary reason to take profits there is because we traded underneath this power bar, right? Now I'm still in the position. I'm just peeling some off. But again, if it came back up, this is why when it comes back up, it makes sense to take another short, because I could have taken, so I took 8 here, I took 3 off. When it came back up, I could have put 3 back on as soon as I saw on the down this was rejecting in the same exact location. I could have put 3 back on, and then as it falls here, you get 3 off and 2 off, and yeah, payday, right? Now that is a sign that I should be considering whether or not I should be trailing my stop. That's what that noise means. It automatically trails my stop to break even, but that's not usually the right place to put your stop. Break even's almost always the wrong place, but it's you know, the psychologically comfortable place. So I have it go there so I can like take a deep breath. It's just runners, worst case scenario, I lose nothing, and I can try to objectively decide now, where do I really want my stop? Like, where do I know that if they trade behind this level that I don't want to be in this trade anymore? Sometimes you can't trail your stop because there's just no action in here. If it's just like zoom, right, then there's just nowhere to trail your stop, and you just hold it. But once I hear that, what it basically tells me is that we've gotten a move here that is not your typical like up down rotation, or it's at least your typical up down rotation. That's the way to think about it. That we've now done one of these, right, from like the blue to the blue, which is totally normal, right? And so it's a mean reversion strategy, and we are seeing a normal response to that. So the natural thing to do is to take profits. Now, like I said, I've already gone down from 8 contracts to 2 contracts. So there's really no reason to be like anxious about it. But if they start to put some aggression in, especially since they tested both the voodoo range level and that's also the orbiting level that we've been seeing them consolidate at, if they start defending here, they're going to come for this liquidity. So there's really no reason, I think, at this point to leave my stop where it is. But what I want them to do is make another lower high and then roll over, and then I can put my stop above that. The only other logical place to put your stop is like delta neutral area, like this. That's okay. It's definitely slowed down quite a bit. They got this speed trap to the upside, and this one was divergent, and it had a star. So this is probably going to become a pivot. Oh, it already is. The 11601 is already a pivot. So, yeah, this trade, this short might be over. But that's what runners are for. For the times when you're sure it's done. And it goes 150 points. Now, the other thing I should be doing once I've heard that trailing stop sound is to consider where I want my target to be. And in this case, what I'd love is for it to actually get through low of day. So I'm gonna go ahead and target like below low of day. I don't know how far it goes from there. I do like having somewhere where my bracket order is, right? Like I need psychologically to have a place to get paid. So I'm thinking like anything under, I think anything under 500 is probably pretty good. That's another 100 points, right? That'd be crazy good, actually, now that I think about it. Let's be reasonable. Let's say under 11,560. Well, that's still not low at A. I guess I didn't realize just how far that is, but we made that huge drop in the beginning at the open, so like it doesn't seem that unreasonable that we would take out the low. It just won't go straight there. It's frustrating to me to consider that we might actually drop the low a day without taking any more liquidity. Like, that's really hard for me to imagine happening, and it makes me want to exit this trade. Because again, we didn't collect any liquidity here. Yeah, you know what, you guys, this is okay. I really want to exit this. but I'm practicing not exiting it out of impulse. So let's just wait. But if we get a buy signal here, I think I have to exit it because we have not collected any liquidity to the upside on this rotation. And the chances that they just flush it to the low without taking liquidity, it just seems really weird. But liquidity has been so low lately that like weird shit is happening. So just because it would be abnormal doesn't necessarily mean it can't happen. That's what I'm trying to say. So this low has been support repeatedly at like 70. I don't mind taking profits under this, 11,570, 11,565. I think that's a great play, right? If we get a flush here, especially if it's fast, I don't think that's a bad idea. What do you think, Ronan? Hey, kitty. Should I sell? Okay, he says no. Thanks, Ronan. The clairvoyant kitty says hold the short. He just ran down the hallway. I don't know if that's a good sign or a bad sign. Literally ran away from the screen. That's okay. I'll stick to my algo rather than using superstition. How does that sound? Let's just do what the algo says. Let's just do that. So we'll just stay short and see what happens. We've already gotten 6 out of the 8 off, you know what I mean? Like it's a tiny position now, it's just runners. But every bone in my body says we have to take this liquidity before we can take the low. But I'll, you know, the times when it doesn't work, when that doesn't happen, and you exit your runners early, just because you know it usually doesn't do that, and then it drops like 100 points, like oh my god, how frustrating is that, right? So like I have to prepare, I have to put myself in the position of the future. If I want to continue trading for the day, I need to imagine what happens. What's the worst case scenario psychologically? Not for my P&L, right? My P&L is completely protected by my risk management process, right? I don't have to worry about my P&L. As long as nobody hacks my trading account, my system will manage my risk. So that's a relief, right? What will not manage my risk is if I stop trading my system, right? If I abandon the system and go on tilt, P&L is out for grabs. Right? It's gone. So instead of thinking, how can I avoid the stop? Or how can I avoid taking a loss? Or how can I protect my profits on this trade? What I should be thinking about is what would be the worst case scenario psychologically, where what would I have to do to put myself in a position where I may get off process and start getting on tilt? I am Ted. I am in a short. I don't know if everybody can see the chat if I leave this up on YouTube after it's not live. So I got short. We got short here at this star with the purple diamond here, and then we've been taking profits as they drop. And I've still got I got 8 contracts, and now we've got 2. So I mentioned that the optimal play is actually to reshort when they go back to this location. But I didn't get an orange bar or a star or a diamond on this bar, so I didn't do it. But technically, that is ideal. Oh, fuck. I got to get out of this. That sucks. Okay. Oh, come on. Close. Okay. So this green bar down here at support is technically a buy entry, which means we're going to exit the short. So I've exited the short. I'm not going to reverse, because this area is a choppy area to trade. But yeah, you bet, Ted. Yeah, you guys feel free to ask questions. I'm not. I'm just rambling. So you can ask whatever you want. And I know it's confusing. Okay, but yeah, what I'm trying to show you is on the again, it's hard when you can only see one of my screens. But on this one, we talked about earlier that what we really want here our trades from the outside in, because the value area of the Globex to now is like in the center, with the POC below us. So like we want to be getting our shorts up here and our longs down here. We really don't want to be entering at 11,600 or 11,601. That is like the worst place to enter. So that trade was aggressive because our entry was only like 30 points from, we entered 20 points, 21 or whatever. We entered so close to the midpoint, to that orbiting level, the level that the market is orbiting around, that it's just a scalp. But what I was saying is that sometimes with those trades where it's like, it's just a scalp, it's not going to work. If I don't have a logical on-process reason that's back-tested to exit the trade, and instead I just kind of like pussy out and exit, because it's like, this is good enough, I'm happy, right? If I do that, and then it rolls for like 150 points down to the low day, that is the only scenario I can imagine where I may respond with a psychological tilt. And that is the only way I can actually, like, I have to worry about like my account, is if like Mr. Hyde starts trading instead of Dr. Jekyll, right? Or wait, is that, yeah, I think that's right. No, that's reversed. Yeah, I forget. But you know what I mean. If the tilt face comes out, all hope is lost. We're not going to trade on process. Nothing's going to work. But as long as I can trade the process and I just follow the rules, P&L is managed and we're good. So here, so we can sort of keep our running total. Can I show you this without getting my count number in there? I think so. So we're at 297 now, trading 8 micros. Slow and steady wins the race. That's all I'm saying with these guys. These prop accounts are tricky. The trailing drawdown is really hard. I'll be honest. It's tough. But if you have a process, it is possible. It is possible to qualify these things. So this was technically an entry. It just was at the wrong spot. I don't really... The only reason I would buy this is if I thought that we were in some sort of an uptrend here, which I don't think that. But if this was like higher low, and we get the green bar there, like that's usually good. But the fact that if you back out, what's actually happening here is we're just consolidating around this level. See that? There's like wide range, a little bit smaller range, a little bit smaller range. Eventually we're going to break out of this area and the trading will get a lot better. But at the moment we're just kind of like in an area where there's not a lot to do. And that's why there's so many, like I'm drawing all these rectangles on spots that I can look for trade setups, like locations. And there's so many of them because we're in a really choppy zone. So when I start to see that, I need to remember that probably means that all of them will work. In other words, my trades won't go anywhere. Like I'll get in like where we did, and the chances that we get past the last purple one, which was here. The chances that we get down here, or is there a first one? Here. The chances that we get past that are super low. And that's pretty, we didn't even get to it. Oh, did we have another one? No, that was it. Was there? Yeah, that's it. So for us to be bullish now, what we need to see, if you want to be bullish, is this arrow right here. We need to develop volume. In other words, get the yellow line above that 11,631.25 and close a bar bullish. It's the only way, and that's it's not a buy entry, right? But it's where you could start thinking, wow, this might actually have some legs. So that's where things could change to the bull side. And then really it's already got a bear. It's all the bears have to do is just not let that happen. Like time alone spent in this area will result in a bearish extension unless they can get the yellow line here, which is the POC of the individual bars, to get above 11,631.25 and for them to close the bar bullish. Otherwise, this time frame is bearish to neutral, right? Obviously, the bigger the time frame, the more it matters. So, like, we may find something different here, but I don't think so. Right here, yeah. Technically, it's actually bearish. Oh wow, that's the high day. Okay, so the higher time frame, the 80 tick, says we need to develop volume above high day, 11,723. Is that right? 11,7. Yeah. Otherwise, if it doesn't, it's gonna resolve lower. So chances are this is going lower. But if they can like attack this area, get volume above it, come back in and bounce, you never know. And if it does get over the top, all these shorts are trapped, right? So it's like, if I was short on a higher time frame, I would be holding my short, but I would be watching this area very closely. The 11,650 spot, like if I saw them start to develop volume up here, the next time we went down, I would cover my short. If I was like swing trading, right? Otherwise, you could do the exact same thing with high day. If you were actually, that would be more of a swing trade. If I was trading like the hourly chart or the 30-minute chart, yeah, I would wait for them to get some buying up here, and then the next dip, if possible, I would exit. If I was swing trading, I would do the exact same thing with the high day. If they can close a 30-minute candle with most of the volume above it, get out of that swing short. And so it is fractal. It does work on every time frame. It's just a lot slower on the higher time frame, so it's tougher to. You have to, yeah. You can't just like. What am I trying to say? There's going to be so much information between the time when you get that signal and you actually exit that it's, you're. There's going to be a lot of times where you're going to basically have an indicator telling you to get long and an indicator telling you to get short because the time frame is so high. And so you just kind of have to decide, like, how specific do I need it, right? Am I only going to be focused on the highest time frame, or do I care about the rotational, intraday, like rotational moves? And that's just a question of where your risk is. Right? If you're okay putting your stop at the low a day, like because you're trading options or something and not NQ, then then maybe that works. But for me, I can't risk $20 a point. Shit, I can't risk $2 a point and put my stop at the low and just hold along or something, or I guess in this case would be stop at the high, and hold your short and just like be okay risking 50 points on futures. Like, that's just not something I'm comfortable with. But I would do it with puts. I don't think there's anything wrong with that. Because then you don't have to pay as much, most likely. And sometimes with VIX, that's how you do, but there's basically, if you can manage the leverage, then you can better manage your risk. But with futures, that leverage is heavy. And the only adjustments you have is to go to NQ or MNQ, and if MNQ is still too much, then like there's not a small anything smaller than a micro. And I mean, yeah, one micro I suppose wouldn't be that bad, but like if you're gonna, the problem is that probably means you can't hold it overnight if you're trading futures unless you have a really big account. In which case, like, why you're trading the micros, So options just work better in that scenario, in my opinion. Unless you really thought you were going to get out during London, then I guess options on futures might be even okay. Oh, talk about leverage. That's ultra leverage stuff. So it's just going to chop around here for a while. We are finally back into the sell zone, so now we're going to see if the supply exists still in this supply zone. And like I said, that's what these pink areas identify once we trade under them. We have to get a pink background, get under it with volume, and then anytime you return to it, expect supply, right? And when you get an aggressive seller, that's a short. So technically, if we got an orange bar right here, or a star down, a yellow star down, or a red diamond, or any of the aggressive signals, you could technically short it again, right? The problem is that where's your target, right? They're making higher lows now, so like, would you target 600? Like it's just not very good risk reward now. It's gotten so damn tight. You're basically if you short this, you're trading for this, and I don't have a way to know that that's going to happen. All I know is that there should be supply there, right? Like you don't really know what's going to happen when they get to where the demand is. Who knows? But I want to have good risk reward so I can take profits before that, and my runners can go under support, because that's, in my opinion, the only way to be a consistent winner, quote unquote, right? Is to have a result like very, very often that is in your favor. And then when things go really well, you get paid big. So there's the entry, right? Another star down. Did it not contact this? I think it missed this. Oh, 31.25. It literally tagged it. Interesting. Interesting. Let's see what happens here. Really choppy here. I don't know if this is going to work, but technically what I wanted is a wick inside of here without a close above it, but this tagged that level exactly. I'm not sure if that's more bearish or less bearish, because it doesn't happen very often. I'm guessing that it's probably still bearish, but not as bearish. I think what we really want to see is actually this. If you want to be bearish here, if you want to be shorting, what you really want to see is this high getting taken out and then seeing it roll over with aggression. Even better, this high getting taken out. Although with all these lined up like this, they could just break out. So the short entry, if I was short, would be on I would have to wait for one of these bearish bars to close with an algo signal, so like here. And so my entry then would be anywhere in this zone that I can get short. So it would be anywhere from 11.6, 14.25 to 11.6, 31.25 would be actually technically you could do it up here too. Anywhere in here would be an okay entry if the supply still exists, right? And I don't totally know what that means when it just taps it and it doesn't get into here. But let's say they come in here and they reverse it. Wherever the close of that bar is with the aggressive sign, that's where the entry can be. It can be right away or it can be later, but it should be in that general zone. And then the stop needs to go above the supply, right up here at 11.640 basically. So that's why I want to get as close to that as possible so that my risk is small. I really don't like taking more than 15 points of risk. I'll take like maybe 16 or 17, but I won't take any more than 20 for sure. If it's more than 20 points risk, it's not worth it, because a lot of times I'm getting out of the majority of my position at 15 points. So it's like, I got to take 20 points risk. Why do it? So they tapped the resistance, gave an aggressive signal, and immediately traded over it. That's interesting. Let's see if this may be actually a sign that it's going to break when it taps it like that. That it's possible. I haven't seen it very often. But that might be something to watch for, because it literally traded to the tick and then reversed with an aggressive signal. Oh, and then the arrow means that if we can get developed volume up here, it's actually bullish. Oh, that's interesting. It's actually got it's got the yellow arrow in it too. So now, I guess we're getting a lot of signals because this is the chop zone here. It gets a little bit confusing. It's very convoluted. So before the level was here, and these are lined up. See that? These arrows are perfectly, these bars are with the yellow arrows are perfectly lined up. So what I'm thinking is it may be a bullish breakout becomes likely as soon as you can get volume right here, which is right now. Now I wouldn't buy the breakout personally, just because that's not my style. What I would want is a low risk entry back into this zone if I wanted to try to buy it. I wouldn't buy the breakout just because you'd have to put your stop down here, and that's a big stop. So, and you're getting long in an area that's choppy, like you know, I would only do that if I could get really good odds on my buy. So if this comes down to like 11 6 15 and starts to bounce and gives me an aggressive sign, like yeah, then it's probably okay. But they did get that yellow line above the high of this arrow bar, and definitely above this, and definitely above this. So they developed one tiny little bar of volume above that. Oh, now they're going to give an orange bar. Whew, they are fighting over this hard. This is where it gets tricky, because technically if it's an orange bar here, it would have been a short signal. But because they put this arrow here, we're supposed to be bullish. So I'm not totally sure how to handle this. Let's see. Let's see what they do. Because technically, if it's an orange bar here, it's a trap back into this high, and that's usually bearish. But like I said, the opposite of that is getting over one of these with volume. So there's the potential short. I'm going to skip it because we got over this guy. If we hadn't printed this, I think it would be okay to take the short, but I don't think this short's going to work. Because now that we've developed volume up here, this confirms that there's supply down here. And so what we actually want is them to trade into here and rip out of here with aggression. But it might just drip. In which case, that would mean that this signal here supersedes the arrows. And I don't know which one's better. They're those two are brand new. I've back tested them. I know they work. I don't know when they don't work, right? I know sometimes they don't work, but this might be the exact scenario where that doesn't really work out, because it's gotten a short signal in the same place as it's got the long signal, and the long signal is more recent. So usually the most recent information is the best information, usually. But I don't actually have metrics, because it just doesn't happen very often that you get a short in one area and then, 30 minutes later the exact area tells you that it should be a long. Like it used to be supply, and now it's telling me there's actually demand down there. So I don't want to short into demand, right? But I don't know how good that buy signal is when it's actually trading into old resistance. I'm not sure. We will see. We will see. Because originally I would be shorting right when that closes and putting my stop right here. Right? So it'd be like 26 short, 26 stop 40 would typically be how I used to enter. But like I said, trading even one bar with volume above one of these arrows generally means that this area has demand. But I don't know if that applies when it also said that area had had supply just 30 minutes ago. This probably only occurs when it's really choppy like this in these areas that we really shouldn't. It probably just means we shouldn't be trading the area, right? It's like there's just a mixture of too many signals in this small area, and so it's like it's just not going to go anywhere. They're just going to fight over it. So it probably is just a sign that neither of them are very good trades. But we'll see, because the higher time frame I'd say has a bearish tilt, but the most recent information says that there's demand here. So do with that what you will. That just tells me we don't have agreement. I'm going to wait until I've got like a better signal, preferably just a better location. The signal's fine. It's just it's not a great location. Let's see. So this is the high, right? Let me see where the volume is on this move to the high. Okay. So to get bearish again, we need to develop volume back down here. So none of the signals matter until they close the bar. So like you can see that flashing blue arrow. If it doesn't show up when it's closed, it's not showing up, and it's It's not. It's just warning me that the conditions are there for it, but only if it closes bullish. And since we don't know where it's going to close, you can't use that information until they close the bar. Okay, there we go. So see, they're trying to put in that blue bar here, but they need a bullish close. So they are trying to show up. They're just not getting any buyers. Interesting. Okay. Well, this is not, like I said, this suggests that the short signal that occurred here was better than getting one little bar up here. But I think it's just going to mean that we're going to chop in here. That's what I think it means. Because it did not signal buy, right? We got this one, but once it got this volume up here, it came back in here, and they just didn't have any aggression in the area. So it warned that it might be bullish, but it did not signal to buy, and we did get a sell signal. I just don't know how to take this sell signal when I know that well, I guess you could take it and then immediately exit if you see a sign of aggression. Maybe that's the way you deal with it. I'll have to think about that. I think generally I'm not going to get those back-to-back signals like this unless it's a choppy area. So it probably doesn't matter. But now that I think about it, one way to handle it would be short it anyway, but then like if this bar closes up with a star, you just get out or flip, reversed. And it didn't, you didn't have there's no aggression to the upside here. They just let it fall right through. So the higher time frame appears to be correct. Now we're back into this one. If they give this away, see, they've already beat a green bar. I don't think this support's all that strong. Which is why I shorted this to begin with. Okay, so now we've traded up here. We did not have a reaction. I actually don't really know what to do here other than just wait for another signal. Because the short was the one that actually worked out and the buy just didn't happen. So they did not trigger it, even though it was like the conditions were right, but it did not trigger. Whereas the short did. So yeah, I think the right way to do that is if you're going to trade in this area, which is super choppy, you just kind of take the signals as they come and be prepared. Know that since you got over this, be prepared for a buy signal to go off in that zone. But it didn't, and they've now developed volume below it. That's pretty bearish. Now I'm praying for him to come up here and reject with a star. That would be perfect. I really don't want to get short down here, though. I don't want to do anything at 11,600. Let's make that very clear. And here's why, if anyone's just joining. That is the middle of this grinder, right? Right at the voodoo range level here. They have been orbiting around it for like days. It's literally been days orbiting around it. Tighter and tighter and tighter and tighter until someone, and I don't know who's going to take it. I think it's bears, but I don't, I don't trade on like, I think this is going to happen. Like that's not how I do this. that doesn't seem to work for me. I'm just not very good at that. Like, this looks bearish. I think I should short. No, like I actually need a place to risk off of and a signal to get long or short based on like order flow. And all the algo's doing is just looking at this, you guys. Just so you know, it's just looking at this information, and we've taught it to look for certain conditions, right? That's all it is. It's like, don't overcomplicate it. Right, the bell tells me that we're beyond the channel now, so that usually means there's momentum in the market. So this short was actually pretty good. It's interesting because they did exactly what I kind of wanted them to do. They got above this high and then they rolled it over. I just got spooked by the fact that we got over this. So I'm gonna have to work that out, whether or not I want to take that trade or not. Because it should be a high odds trade, but yeah, I think the right answer is you take it and then you prepare to exit. I'll have to see how often this fails and then reverses. I'm not sure. I'm not sure. All right, so they've got this blue bar here. blue arrow, I mean, here. So that's our new area of interest. It happened on a down bar, which means that they might be preparing for a scalp back upwards. But we want to see some capitulation here before we even think about getting long. You don't just fight momentum, you know what I mean? Like you need them to give up first. You need buyers to give up and then show up to come back. I'm not buying it just because it gets lower, you know what I mean? I want them to give up and then I want to see them attack, basically. Otherwise, I'm not going to buy. But the key is that this area here is where we had like sellers getting a little bit overzealous, is what that's saying. And so they may be able to bring it back into this area, but what I want is for it to come from down here so that I have a better risk reward. It doesn't really help me much to get long here with this target of here, you know what I mean? Like that doesn't make sense. So we just have to wait and see if they can capitulate. We might get a scalp to the long side. I'm not going to take this trap back in though. There's no arrow here. If it had a blue arrow here, it's an okay trap, but this is not good enough for a trap. This most likely what's going to happen is it's going to do this and then this. That is usually what we see here. It'll reverse right on that 11,600. If it comes back up here and reverses, I might actually get a short. But I highly doubt that'll happen. Oh, all the volumes at the low. Gross. Okay. What a sick short that would have been. That's interesting. That I talked myself out of that. Yeah, one way or another, the location is not ideal anyway, but I would really prefer to be able to catch this. At least I got this one. But yeah, that one bar being bullish above the arrow was just not enough to actually create any aggression. It was, and so I have to be willing to be a little aggressive on those higher odds trades. But like I said, here the location's not ideal anyway. They just made it easy once you were short. Like if you took it, it was easy to hold it. But I was anticipating them to try to hold this level, and they just didn't. And so you certainly don't want a long if they're not trying to hold it. That's for sure. Do not be the hero. I'm all about following heroes. I'm okay with that, but don't be that guy. Right? If they do something dumb and then everybody starts following them, like I don't care, right? I'll do it. But I'm not going to be the dumb fuck who like buys it as it like dumps to the bottom because it might be the low. No, that's not. Nope. Let someone else do that, and then when everyone else agrees, then be like, oh, okay, I guess I can probably get 15 points here. Like, that's much better. Or let them step in the trap and then fail, and then you can, take advantage of the fact that they're trapped. But I'm not a breakout trader. I'm not going to short anymore. If I don't get the pullback, I'm not going to short. I want to make that perfectly clear. Especially not in this chop zone, right? There are very few situations where I will be shorting the lows because it's so hard to get good odds. Like you're going to have to put your stop so high up. It's a pain in the ass. And when it doesn't work, it hurts so bad. Because you're literally selling exactly where they bounce it, right? I mean, sometimes it works, but your risk reward's got to be great in order to do it. You have to have a clear signal a lot lower. So even if they aggressively sold here with like a big, like an iceberg or something like that, I'm not shorting it. And I realize a lot of people do, and that's fine. But I make my money by managing my risk, and I would much rather short from up here. And if I miss this, if I miss this short, if I skip it, I'm not going to short this just because I missed it up there. Nope. Not going to do it. I don't care if it works or not. It's just not part of my process, right? It's not something that I've shown to work for me. And I know if I just follow the process, I know that it'll work more often than it won't. So that matters more to me than anything. Is the process works, so trade that. And that's what keeps me disciplined, basically, is all the back testing to know that if I just wait for the signal, I'll do fine, right? Doesn't mean I won't have any losses, but more days than not, I will come out ahead. The days that I don't come out ahead are the ones where I start experimenting and I'm like, you know, if this was a short, this is probably a short, and if that's a short, this is probably a short, even though I have no like evidence of it, right? I just start making shit up as I go, which usually happens because I'm bored or distracted or tilting because I didn't make a good decision or whatever, right? That's where things get fucked up. If I follow the process, it's all good. Stops and wins will net out positive. Maybe not every day, but eventually. Wow, so fucking slow in here. You'd think that now that they're back to this midpoint, that maybe they'd start like flushing back and forth, but nope. Yep, glad I did not short that low because now I'd be freaking out. I really wanted him to go a little lower so I could have bought this, but it's pretty fucking tough to buy that. Okay, we get the diamond indicating that they've got way more volume than you'd expect in that situation. Not a buy signal. Oh, it is at support. I guess if you thought that this was the support, right? If you thought that this was the spot that's going to hold, it volume is a sign of aggression, right? But they also tend to, if it's not support, they like to sweep those high volume bars. So, not saying it always is going to happen, but it's not the highest odds entry I have. If it does get right under it and comes right back up again, that's good. That's good to go. Whoops, what did I do? Click the button. I didn't mean to. Okay, good. At first I thought I accidentally clicked my DOM again. That happened yesterday during the stream. I was moving shit around on my other screen and like clicked in the wrong spot and was like, order filled. I'm like, oh fuck. It worked out though. It actually was a winning trade. A very short winning trade. Very like brief, but winning trade. I hate that. This rattles me. Like that sense of not being in control, right? Like that, like suddenly you didn't plan on being in the trade, but suddenly you have something at risk for no reason, and like you try to make these like rash emotional decisions of like, wait, should I exit? Should I hold it and see if it works? Right? Like no, just plan for that shit, right? Have an emergency response already set, like with like dictated very, very clearly in a plan written down. Every time I do this, this is what I will do. And just like literally practice it over and over and over again until like, you basically want to like react just like you would to like a fire drill, right? Like, you just need to know. There's no thinking involved. If I click a button that I don't mean to click, like if I'm not out of that trade, like within moments, I'm on tilt basically, right? And I'm benched for at least a good 15 to 30 minutes. At least. So see how they're like pretending like they're gonna hold this low? And they're not. Like I don't know if you're watching the DOM, but like they're not going to. I don't know for sure, but they're probably not going to. Okay, nice. So that is actually a momentum sign showing up there to the downside. What I really want is to fucking trap some shorts here. That would be fun. But I don't think they're gonna give it to me. Like if you're gonna sell a breakdown, do it on a diamond, a red diamond. But I'm not gonna do it. But that is a sign that someone is aggressively, quickly attacking that low. What matters to me is how do they respond to it. And right now, buyers are giving up and sellers are currently doing nothing with that information, right? So if they can spike it back up again, it's actually a scalp long. It's just a horrible location to be trading. Here, speaking of which, I'm gonna take it at my other account. If they do show up, I'm gonna nail it in the other account because it's not, this account is this other what's it called? It's a evaluation account, and I'm cool like taking aggressive trades in there because it's technically, that account is technically just paper, right? But I mean it still counts because I mean I pay money to try to get that thing evaluated, but I haven't traded in this one today, so it needs at least one trade a day because you need to get 10 of them in. You need to get at least one trade for 10 days, not in a row, but just 10 days, and it'll be valid. It needs to close bullish, and then I will get in at 90. So I already know that it's going to close bullish at 90.50. So what I can do is I can put a stop buy order at 90.75. That's totally fine. Because if it gets there, I'm gonna take the scalp, right? Even though I think it's bearish, I'm going for like a 10 to 15 point scalp. Now, if they don't close it there, then I lose nothing because I'm just not in the trade. It just doesn't trigger, right? They would need to come up to 90.75 to get me going. Yeah, so it may just not trigger. And you don't have to do it with a stop order. You could wait till they fill it and then see if you can get a better deal on it and take it back in this range. That's fine. You just might miss it, right? If you want to make sure you don't miss it, you got to put a stop order there. And I use a stop market. But yeah, specifically in this situation, it has to have this blue arrow here on the down, suggesting that they're pushing really hard there, and then I see that they're not getting anywhere. That's basically what I'm noticing. If after this trade, I'll show you what this looks like on a footprint if anybody wants. If you guys don't know footprint, I won't waste my time. But if anybody is curious, like, what are you actually seeing, right? Like, I'll show you. I don't have to look at the footprint. I already know it's there because the algo watches it. We'll see if it happens. Still kind of a shitty place to trade, but totally valid for a scalp if it comes back right now. Let me make sure I've got this right. Stop market, 90.75. Okay. And so my stop in this case would be under the low of this bar. So it's not going to be any lower than 72.25. I can put it at 72.25 for right now, and then I can adjust it based on how low they go. Right? And so as long as they don't go lower, the stop actually goes 1 point below this, which is 76. So it'd go at 75 if they don't go any lower. And my entry is going to probably fill at like 91 because Rhythmic kind of sucks. So it's 16 points, but I mean I'm cool with that. That's close enough. Like 15 is really what I want, but what's another point? And then my primary target is 601. I want to see them sweep above the big figure, and then I honestly do not know what's going to happen after that. No clue. Because all of this was all supply. So, yeah. If they can put in another blue arrow here, if we get one of these on an up bar, it could rock. Also, if we get a pullback that then comes back with a green bar, that would be beautiful. But I don't need it to go that high, right? I just want 10 to 15 points, please. That's cool. I will scalp my way to an average winning day.
Filled.
All right, filled. Why did it? Okay, so Sierra chart didn't think it hit 90.75, but Rhythmic apparently did. That's bullshit. It better go there. That was weird. How did it fill me? This says it did not trade at 90.75. Oh, it's because it's MNQ. Oh, those bastards. The micros hit it, and NQ didn't. And I'm trading the micros today. Wow. Okay. That's bullshit. They better get there. Otherwise, I'm going to have to explain this. And I do my coach. Okay, good. So, oh, yay, we got the blue arrow. Yay. All right. I love these trades. Doesn't mean it's going to work. Sometimes it trades underneath it and comes right back, and then I actually have to re-enter again. But that having another blue arrow here gives this actually a chance to attack uh, resistance. But I still will take my profit here. I'll just hold a runner now. The star here helps too. And see how you can't see it because it's behind here because there's so many damn signals, but it's blue diamond trading back into the range of a blue diamond after trading below the low. So in other words, big old volume candle that no one expected got stopped out, and then someone came back in with the big old volume again. Like you can see it on the footprint. It's going to be really obvious. And then the star is saying that there's an aggressive trader down there, making an aggressive move. And then the arrow, like I said, is the new signal that basically says, as long as we're not ultra bearish, this level, we should not be putting volume in below this level. And if we can't put volume in below that level, this has this range here has demand waiting for it, right? Like it's just an order flow signal that says like there is demand down there waiting to get filled. Doesn't mean they're always going to hold, right? But what it does mean is, first of all, when it does hold, that you're usually going to get a reaction. But when it doesn't hold and they immediately take it back, yeah, that's really strong. So what I really want is to break above this level. The top of this blue arrow bar here, the bar with the blue arrow on it, because there was also a buyer in here absorbing these cells. And so if we can break back over that and they buy it up there, squeeze, right? Yeah. That buyer might have become a seller though. Keep that in mind. Like 600 might just hold. Like just because the potential for a big squeeze is here does not mean it's going to happen every time. But the only way you're ever going to catch a squeeze is if you put yourself in the situation where they might happen. And this is the scenario where you get these squeezes. This is where they happen. What you don't know is whether or not it's going to happen right away, or whether or not they're going to have to get under here one more time and then pop back up again. Thankfully, if they get under here and don't pop back up again, I know it's not going to happen, so there's no reason to hold this trade. I can just get out of it, take the loss, and then wait to see if I get re-triggered. I'm not going to hold as it falls. That's ridiculous. It's like, this is the line of the sand, right? Like, if it doesn't hold, then I don't want to be long. But if they come back and retake it, it's a way better long than the first one, which I know is confusing. It's like, how could it be bearish if it's under it, but bullish if they take it back? Like, that's literally just how the market works. Like, I swear. This is good. If we trade under it and pop right back up right away, it's better. But you don't want to stay long as they fall under it, because that's actually super bearish, right? So I know it's just dynamic. It's like the market, when everybody's wrong, the opportunities are huge. That's really all that is. When most everybody thinks they know what's going on and they're wrong, that's where the money's made. Okay, so I'm looking, like I said, I'm looking to just go ahead and get some profit taken out, because I don't know if this is going to actually squeeze, right? So I want to be paid for the risk I'm taking. I'm not going to take the whole thing out, but I will take profit here. Oh, it missed me by a tick. I'm just going to take it at 99.75 because I don't know if they're going to break the big figure. They probably will, but I'll get filled in a... Come on. Right?
Order canceled.
Okay, so it says canceled, but that's just my stop order getting canceled. If you listen closely, there's like a little bell that goes off too. Like that's the order getting filled. So it hit the voodoo range level and is trying to reject. We're gonna try to take the next profit at 11, I guess. Up there. I don't know if it's gonna get there, right? But I have this old line in the sand from back here. When we broke under it, we knew it was bearish for the time being. They may defend it, right? So that's 11.25. I'm going to take 3 more at 11, and then I will leave runners as long as they will let me. But like I said, this setup you guys, works a shit ton. If you want, if anybody wants to see it, I will literally like scroll back and you can pick a day, and we'll see if we can hunt it and find it, and I'll show you. It's nuts how often it works. I probably shouldn't boast about it until it actually pays me, though, huh? At this point, if it fails, it'll be a less than 1 hour loss, so that's the good news. The only negative thing about this is the location. We're trading right into that level that they're orbiting around. And so if it's bearish, it's going to act as resistance and we're going to roll over, right? But I actually think it is setting up as if they're going to do the exact opposite. Trade over it, come back, bounce off of it, and squeeze. That's what this setup tells me. Technically, though, we do need to get over this guy for anything to really get going. It needs to get over this purple, the bar with the purple background. We need to develop volume up here. Otherwise, it's cooked. So it needs to get up here. And unfortunately, that's exactly that level that we should expect to be resistance. So it may just die, right? But at least I won't lose a whole R. And then it might trigger again, and I will have to take it a second time. So there's an aggressive seller in that bar. We're going to need to trap them. But you can see this, there's already aggressive seller in this bar too, but they haven't closed it bearish. So we really need this bar to be bullish. Yeah, he's sitting there. We need to get this going higher right now. Because they're attacking this level below 11,600 now. Like they're getting more aggressive as we fall lower, which suggests that they think they can get to that 11,575. And consensus is usually right, but when they're wrong, it's going to be a huge squeeze. It might take 2 tries. We might need to get stopped on the remainder. At least I took some of it off. Like I was totally aware that that 600 could cause problems. I'm glad I front ran it just 1 tick, and didn't wait for 1125 like I wanted initially. Otherwise, this would if it stops, it would be a full R loss, which would suck considering the setup is so high odds. But sometimes they're going to fail. I mean, even if something is 70% accurate, like 30% of the time, it straight up fails, right? All I can do is wait. Already made my decision. Already had the signal. I know it's valid. I know the location's a little sketchy. Either it works or it doesn't. If I wanted to get out of it, I should get out of it when it's profitable, like right now, you know, because now it's profitable. So like, if I don't like the trade anymore, this is where you get out of it. This is when it's profitable, and I don't have any reason to get out of it. All right, we need to trap that star. We need to get above his high, which is like at the 601 level. Preferably with a white bar, not a pink bar. The pink bar is a sign that sellers are giving up there, which is interesting. I want a white bar to print here. It doesn't need to have any aggression. It just needs to not be bearish, and preferably not be pink. If it's pink, I need it to be fast with a white diamond. Let's see, because that would suggest that we trapped somebody, which would be awesome. Looks like it's gonna be pink. White triangle, maybe. I don't see a diamond showing up there. It doesn't matter until it closes. It's nothing until it closes. So they're trying to give it some follow through. That's what the triangle says. They're trying to follow. Someone's like stacking, but yeah, there's so there's follow through, but there's no new aggressive buyer there. This is not a bad place to bail if you're unsure about the trade. I'm sticking with it because I've already taken my profit. But had I not taken my profit earlier, I would be taking profit here, right? But I'm just gonna see if it can get to my 11, and then I'll leave the runners because I don't. It's not invalidated. It's just like this. If it's gonna fail, this is what it looks like. It gets pink up here and then it rolls over. Because that means sellers are giving up for the moment, but the buyers like aren't getting more aggressive. Right? If it turns white, or if I get a star or a diamond, then I know buyers are actually increasing their aggression. A pink background would be great. That would identify a new line in the sand. They can just keep going up though, that's fine. I don't care what it looks like. If they just want to keep going up, that's cool. Just keep buying it, that's fine. But no, it's realistically like the likelihood of this continuing decreases if I don't get a white bar here significantly. You never fucking know. I've seen so much crazy shit. Right? Like everything can look like you know exactly what's gonna happen, and it's like, nope. So. But see how they got the volume point of control, that little dash? They got it above the level, the 601 level, and then sellers suddenly showed up. If this has a star, yeah, this is probably gonna fail, you guys. This is probably gonna fail. I'm gonna leave it, but this is probably gonna fail. Sellers are defending that level. They're trying hard to defend that level. We need an aggressive buyer to show up here. A white diamond would be perfect. But we might need to sweep this low and then come back. Or the buyer that was there is just gone. That's also possible. But like I said, I'm gonna get way more tilted if I bail on the trade and then see it go 100 points. That's where I'm actually gonna fuck up. So I will let the stop hit and learn from that. Fuck. They're gonna get me. Wait, why went I?
Order canceled.
I was gonna say, why did I not get stopped? Okay, so they stopped me on the remainder. And now we gotta see if they trap back in. And if they don't, I'm gonna run and get a new drink. And I'll be back. But they might just trap it right back in here, in which case we have to re-enter. The blue arrow would be fantastic if they close it bullish. So now 84.75, I get back in. And if they don't give me 84.75, I'm no longer interested. It's tempting to take this with double size, but I'm not going to. But it is a better trade. And if you're going to take something on higher size, this is what we do. Okay, so we got long again. This usually works, you guys. Stop. It's going to go at 69. Okay, stop 69. If this doesn't work, I'm just going to, yeah, I'm going to take a break and come back, and it's fine, because this usually works. Much higher odds than this one. And this one was high odds. This one was actually very, very, very high odds. Oh, my targets. So I'm going to take one on the way up. Where's that purple bar? 94. Okay, fine. And then we'll take one at 11. So if they get just up to here, this purple bar here, I'm going to take some off. Because then if it chops up and rolls over, I again will not... Because I didn't lose an R on this trade since I took profits. So I will once again take some off if they just give me a little bit of an extension. Then I'll leave the rest for up here and then have the rest of the remainder. And then have runners to go, right? So I'm going to do...
Order cancel.
So 3 out. And then I ordered to sell 3 here. And an order to sell 3 way up high. Sorry, 2, because it's 8, not 10 now. So in both cases, we got our little bit of profit off, decreased risk. The first one didn't quite, I mean, it just missed the target a little bit, you know? And that's going to happen. It did drop back in. This is a much better trade. You can skip this one and take this one, but then you have to accept that you might miss the 100-point move. But now you basically just put your targets as high as you're comfortable with, And like primarily my goal is to get it up here. Like I actually want to get it like up to 50. Um, ideally. I don't know if it will, but that's what I actually want to see. You know, like 40 even would be fucking awesome. We'll see. We shall see. What time is it? Okay, cool. So we still got another hour and a half, 90 minutes left. Chop, chop, chop. Now notice they did break above this purple background bar. See this purple background started right here, and they have now put volume above that, right? So that means that pullbacks into here that get defended can actually be long signals as well. So even pullbacks here, it's got to bounce before I would take it if I wasn't long. But had I skipped this or missed it, and they pull it back and then give like a green bar or a star or any of those signals coming off of here, that would also be a long. But again, the stop would have to stay under here. So we'll see. And one thing I can do is I can actually add the 3 back if they give a signal like that. I can, and that would be able to get me if it works, that would be able to get me my here. You know what? I'll show you. So if they bounce here, I will take I'll take another trade, another entry. I mean, it'll increase my my average, but since I've already taken 3 off, I can take another 3 here. But it's gotta close bullish, right? But I'm just basically putting my 3 back on because they confirmed that the area has demand. It doesn't have to be this bar. It can be like the next bar. Like if this one's bearish, it could be the next one. But it's got to be green or star. That orange bar is not great. But like I said, if they bounce off this area, I know that generally it confirms it as demand. But as we saw up here, sometimes they just don't do it. So well, you know what I just noticed? This blue one got a VPOC with 1 bar right behind it too, just like this one did. So that may not be as bad of a sign for the arrow trade as I thought. Because this one easily got beat. This one easily got beat. So I wonder if I've got to retool that a little bit. It might work with the purple ones, but it might be just a little bit different with the arrows. That's interesting. I will take a look at that. Oh, here we go. Let's see if it... So if this... It's got to be green or a star or a diamond on the way up when it hits 90-50, and then I'll mark it in if it is and put my 3 back on. If it closes bearish again, that's not what we want to see. But if they defend this level, that would be a sign that there's demand still here. If they sweep this low, I'm not going to take a 3rd time. That's fine. Like and then it just becomes basically an R loss, a little bit more from those 2 stops because I got some of my profits off. It'll be just slightly more than 1 R. But I got two shots at a potential like huge move, so I'm cool with that. And I traded the signals when it told me to, so my execution is right, which is actually what I care about more than anything. Because I know I won't take too many stops in a row. Because if I do, before I do, I'll just stop trading, right? So if things aren't working, then I'm just not gonna be trading anymore. But as long as the edge is working, as long as the edge is there, I'm gonna keep trading it. So far, there's no reason to think it's not. Taking a stop is not a sign that things aren't working. Taking 3 stops, yeah, that's a problem. In a row, I mean. And yesterday they did get into that like grind down mode, and it can be a little tricky. Okay, that's an aggressive seller that's sitting in this bar, so the re-entry may not happen. It needs to close bullish and have a white star or a white diamond or a green bar. after it closes. The fact that this is taking so long is not a good sign. You'd expect them just to, like, buy support if there's demand here. So the fact that they're not doing that makes me think that it might not work. It should be quick. Like, you should just see them go pop, And if there's no signal on this bar, I will not add to it. I'll just hold what I have. Because I'm still long 5. I'm still long 5. But I will make that 8 if they give me a star here, or green bar, or a diamond. I think I might get a diamond on it. But I don't know. I'm not looking at the footprint close enough to know. I'm just waiting for the algo to tell me what to do. Won't know until it closes at 90. Come on. Push a little bit more. Someone aggressive come in. Fuck, I don't know if they're going to get a star or not. They might not even close it. It should not be that hard. Oh, gross. Yeah, see, there's only aggressive sellers in this bar. That fucking sucks. Come on, you guys. Absorb them. Give me another green one. Green bar, please. Tons of sellers. Now what I could do is wait for it to print the green bar and then buy the pullback and accept that I might miss the ad, but the fact that this is taking so long makes me like not really want to like mark it into the trade, So what I might do before I add the 3 back is wait for them to print it and then see if I can get just like a pause or a small pullback. It might not matter. They might just stop me. But if they can, yeah, that's not what we want to see. This is why we wait for the algo to tell us what to do and don't just think it's going to work, right? Like, we got the signal back here, and I thought we might get an ad here, but it does not look like they're going to give it to us. We're now underneath the demand zone, which is not good. They need to pop this back up pronto. Otherwise, this is going to just stop. But at least I got 3 off again. And like I said, I'll just take a quick break and recenter. It looks like they're going to stop me. Wow. So they're just in grind down mode? That's interesting. It's not what I guess I should expect it because that's what they've been doing. But I haven't seen this fail, this double, I haven't seen it fail very often, so. All right, looks like they're going to get me. Not yet. I got 1 point.
Order canceled.
Okay, so I will be right back, you guys. Give me 2 minutes, 3 minutes, and I'll be back. Just got to grab another drink, use the bathroom, and take a few deep breaths here, make sure that I want to keep trading. At least we got that. I'm really glad that we got the short that worked. Disappointed that I didn't take that one, but these are both on process as far as I can tell. But I just want to take a little break so I don't overdo it. So I'll be right back, you guys. Hold on. Website name. Yeah, well, you can just, so on Twitter you can see me there and ask me questions there if you want. No, Hefe, I'm definitely not going to YOLO. Nope. I will just wait for the process to tell me to get long or short again. That's all. I'm not, it doesn't matter if I go red to green on the day, because as long as the edge still works tomorrow, like, it's cool. Like, I can have a red day. That's not a big deal. What I can't do is blow up from trading off process. So no, I'm definitely not going to YOLO. I'll just, like I said, I'll just take a quick break and then come back and see if maybe I'm missing something. But this like grind down pattern just kind of sucks, and it just happened to trigger me in for a second time, which, like I said, probably just randomness. And when something has like a 70% win rate, 30% of the time it's not going to work, and so I just ran into the 30% of the time twice, and that doesn't happen very often, but sometimes it does. So, but yeah, you can DM me on Twitter. That's probably the best way if you have a question about like how to get a hold of the algo and stuff, and I can get you in contact with my coach Simon. So but yeah, just DM me, and then we can like I can figure out what it is that you are interested in, and take it from there. But I will be right back, you guys. Give me like just a minute. Be right back. I'll leave the stream going though, so you guys can watch. Usually when I leave, it sets up. So this might be the best thing I could possibly do is actually walk away for 2 minutes. So. All right. So, in retrospect, if we wanted to avoid those stops, we would identify that the location was suspect, and that the price action was like pretty sketchy too. It didn't just bounce right back up, right? So I mentioned twice that I could have taken all of it off there if I didn't like the trade or if I didn't like how it looked, and I did get a chance to get out. I got out of some of it here, and I could have just taken everything out, but then you miss out on all the times that it runs. So that's the risk, right? And for me, gaining the information and the experience of just executing it and see how it works is more valuable to me, and also avoiding the tilt of seeing it run 100 points without me when I'm watching it. That is preferable to me. I'm okay taking 2 stops in a row. I don't really want to take 3 though, right? So like now the name of the game now is not get back to green. That's what most people think, but that's not actually best case. That there's a good chance that once you take that like the conditions might not be great for one reason or another. It might be that you're tired, or it might be that just the market starts to trade in a way that your system is not optimal at, right? Because we shouldn't be taking, if we're taking 70% win rate trades, we shouldn't be taking 2 stops in a row. Now, I mean, the good news is, we made, what was it, $297 on the previous shorts, right? And the other good news is that we did get the signal to short there. I just didn't take it, right? Because I thought that this might supersede it, but it doesn't. So learning that um, is valuable information, right? So that's important to like for me to journal about, that like we gained I gained some information about how to execute in these really choppy zones, or why not to execute like this in a really choppy zone. But the easiest way, if you really wanted to avoid the stop, the easiest way to do it is to just not trade around this area, right? And just ignore all signals there. And like I said earlier, the momentum was to the downside, but we just didn't really want to be taking trades in here. So the better trade was short from up here, or wait to get long down where we are now, right? So it, like, when I take those trades that are in locations that aren't ideal, I need to accept that that means that even the really, really, really high odds trades won't always work. So now that we've stacked up all these purple background bars here, it's going to be really tough to squeeze out of this. So we should not be anticipating a V once this happens. Especially when you get a bunch in a row like this, it's going to be really tough to get this to turn around. It doesn't mean that there's going to be no longs possible, but it means that I'm not going to buy purple bar star, for instance, which is sometimes like purple bar star here worked, that combination. But purple bar star in this situation, when there's been purple, 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 purple in the background, and we're way below the very first purple bar of the last series of them like this. This high, whoops, becomes here. This high is. It doesn't mean it won't work. It's just that the odds go down. So 11,562 is where we need to get volume above before we can really, unless we want to be really aggressive and just buy every single one of the signals, like here, here, and here, and just take like 10 points off and trade like aggressively scalp that way, which is fine. There's nothing wrong with that. It's just not my style. I would prefer to know, when do I think we have a chance to actually V back up or move back up? And what will tell us that is when we get above the high of one of these series of purple background bars, one of the bars that have purple backgrounds. So in this case, the lowest one is 11,562. So we're going to need to develop volume above that. Until we do that, we should expect that most of the time, right? And so the better trade, in my opinion, rather than buying purple bar star here, even though the location's good, the better trade is to wait for the short setup, usually. And the short will usually set up in the range of wherever these purple backgrounds started. So here or here. Now, like I said, purple bar star does work a lot. So there's nothing wrong with scalping it. It's just not the technique that I prefer. But if you're trading in Simon's trading perform room, like purple bar, green bar, purple bar star, like people buy that all the time, right? And that's fine. It's cool. I'm glad they do it, right? It's just not my style. I'm not, because I know that most of the time it's not gonna do this. It might this time, but usually it doesn't, right? Not in this kind of situation where you have all this purple in the background. And so the reason why I added that is so that I can filter out the times where it's usually going to reverse back down again, and that my chances of getting anything more than 10 to 15 points is probably not very high. And so if I want to stick with only the trades that have the higher odds to actually extend, what I want to do is wait until we get developed above one of these bars with the purple backgrounds, and it's got to have volume above it, and it can't be pink, so this does not count. So we need another bullish bar here to print. And once that happens, then that confirms that there's some demand down here, and pullbacks can be bought as long as they have aggressive responses. But what's probably going to happen is they're going to sell it right here. And then if I would have bought purple bar star, I would have gotten my 3 points off, and then I'd roll off for the rest, and it would be a net loss. Like that. So this is a better short than this is a long, in my opinion. If you think it could be bearish, then shorting this makes more sense to me than buying this because of the purple bar there. So let's see if we can get a good deal on it. It's got to, let's take it. Let's take it. I don't want to watch it work when I'm not in it. So 68 is the stop. We'll give it a try. Oh, what? Okay, that's fine. I took it in the wrong account, but that's okay. That's fine. Not a big deal. I wanted to let that one chill out because I took 2 stops in it. No big deal. So we're going to put our stop. Whoops, that's the wrong one. We're going to put our stop just one point above that, and I'm entering the trade right in here. So it's like it's a pretty low risk trade to try to get continuation, right? But if they print another white bar out of here, then I want to be taking profits as we fall. I hope that makes sense. If they can develop volume up here and I don't get stopped, like by a tick, and they roll over, I will take profits off. I will get out of the trade. If they can't get it up here and they just roll down, I will hold it, right? But if they cross my stop, I'm obviously just going to get out of the trade because I know it might not go straight up, but it's the likelihood that the low will hold is actually higher if they can develop volume up here. So therefore, because I got this volume shift sign, the orange, if it's bearish, then this is probably the apex. In other words, the lower high. Right, but on the candlestick chart, we are shorting at support. Realize that, right? It's a momentum trade now. Basically, it's no longer mean reversion. The mean is this gray line here. That's the mean, right? So mean reversion trade is buy purple bar star, sell the gray line. That's what my coach teaches, and I can see why, right? It works a lot. Buy purple bar star, sell out the gray line. Buy purple bar star, sell out the gray line, right? Like that is a great strategy. The trouble is that you're not gonna get, most of the time it's not gonna like rip higher unless certain conditions are there. And so the way I've tweaked it, because like I come from a momentum trading background, is that I want to take the mean reversion trades that have the chance to turn into momentum trades. So for instance, like I won't take this one, right? But I knew that this one had a chance to actually break through here, bounce, and go for a long time. So I will just wait for this one, and I'll skip this one. Even though this usually works for 10 to 15 points, it rarely works for 50. And there's nothing wrong with taking 15 points over and over again, especially if you're trading higher size. You can make great money doing that. But you're also going to take more stops. And you're occasionally going to get out here and see it go 50 points and like hate yourself. And that's primarily where I struggle as a converted swing trader. Like my greatest trades are the ones where I was right and I held for weeks, right? Like trading Tesla in like 2017 and 18, like you never sold it. You just bought it. And Bitcoin too, like you just bought it and held it, right? It was easy shit. And so I know that those situations show up where the momentum is strong enough that you can get in and just hold it for the times when the momentum's actually increasing. But I'm not going to do what I used to do, and when I was swing trading, which is like take the breakout trade, because when you do that, you've got to put your stop behind support or resistance. So it would be like selling this breakdown and putting your stop up here. I don't want to do that. I want to sell on the first sign of aggression or on the pullback. So I have like a 10-point stop and then like a 60-point win rather than a 40-point win and a 40-point stop. Right? I would rather take a couple more like shots on the chin, small losses, but then when it works, to have it work really, really, really big a lot. and avoid like the 30% win rate with 3R expectation.
Order canceled.
Nice. So that's the sign that we hit the first profit target. I totally forgot to adjust this, and it just took the whole profit off. Damn. That sucks. I just looked. I didn't adjust it from what I was going to add earlier. I didn't put the brackets on the right configuration to take thirds, and instead I had it set up for how I was going to re-enter this trade. Damn. So I'm actually out of it. That's annoying. That should have been a take profit and hold for a breakdown. Let me see if they give me a re-entry. I'll take it again if they give me a re-entry. That's infuriating, actually. It's just frustrating. Whatever. It's a winning trade, but it's like not optimal. Let's see if they set up again. It might work, but I'm not going to be resulting about it and be like, hey, look, it worked this time now. Ooh, the blue arrow is not what I want to see as a being bearish. That's typically a sign that they're trying to create demand here. So now the line in the sand is here. But like I said, we've seen this not always work how I expect it to. When it gets bearish enough, they may be showing up even when they don't belong. But I know in my back tests that usually seeing these blue arrows usually means, on a bullish bar, usually means that there's demand down here. Just like this. And this one just didn't go anywhere. But what you usually see is a bounce out of that area. All right. Well, let's just wait. I got the winning trade. I'm not gonna, I can say I didn't take 3 stops in a row regardless. Let's wait and see what happens, because I've just got more signals here than I really want. We did get under this blue arrow, but only with purple bars. This VPOC was above that high, so let's wait. This is getting choppy. It's just really grindy, you guys. The PA kind of sucks. What we want for this to work, for these systems to work, is big ranges that are like, tradable. We want to get behind both of these blue lines. We don't want to be stuck inside the half of this channel. We want to be going from one side of the channel to the other side. That's our best case scenario. But getting a higher low here does not make a lot of sense to me. If you look here, they didn't break this. They put a higher low, and now they're trying to say that they're putting another higher low. It just doesn't, I don't know. It doesn't make sense. So I'm not going to call their bluff at the moment, but I'm pretty sure buyers are not going to actually hold this. I just don't have a objective reason for that. The algo says that there's buyers down there. You'd think I'd learn my lesson and just do what the algo says, but like I said, I've been trading for long enough to suspect that just doesn't make sense. And so I'm just I'm not gonna fight it, but I'm thinking that they're gonna chop this up and then flush. But I can't trade on an intuition. I don't have a trade signal that says that's gonna happen. Did I say all the volume was on the bottom here? I think I did. Okay. So it's sitting on top of the volume build. Trying to... There's... No way that works. No way. Total bullshit. I really doubt it. Like, it's technically not a failed signal until they bounce this off and then crush it. It's just like prepare to long if it fires, but what I'm guessing is they're just not going to fire it off. They got a pink bar above both, but no white bar. They came back into the volume build and are trying to bounce off a higher low when momentum is clearly bearish. I don't remember a single time ever seeing that work. in all my time of trading, I don't think I've ever seen this actually hold. But the fact that I'm getting the arrow there is like really, really funny. So like I said, I'll look at the footprint and see what's going on here, because somebody is defending this, and I don't know why. And in my short experience of using these signals, the algo is usually right. I just don't believe it at the moment. But they are holding it at the very moment. They are actually holding the level. I don't know why. I guess they might have trapped someone down here and then tapped them. I don't know. Doesn't make any sense. I'm gonna wait. It technically says if you get a green bar or a star up here that it should be a buy. I'll make that very clear. It has not happened yet. And I doubt it will happen. But it's basically saying this location may be used as a demand zone. If you see an aggressive trader show up, you might want to follow him. I'd be shocked to see an aggressive trader here. Shocked. To the upside, I mean. What it looks like to me is they fell down, they got a little bit too overextended, and now they tried to bounce, and now they're just grinding their way lower because there's like zero buyers, but just not like the seller just is like passively absorbing any buyers until the buyers stop, and then they're just gonna flush. That's what it looks like to me. It's just no interest whatsoever. Like there's no active seller, but the idea that they're actually going to create a demand zone out of this that would blow my mind. But apparently the conditions are right for it to happen. Let's see if anyone's stupid enough to try. But see how long it takes? Like we shouldn't be sitting here in these demand zones, supposed demand zones. What you should see when these blue arrows come is test bounce fast, right? Blue arrow, test bounce. Blue arrow should have been test bounce. It just didn't happen, right? If there's no buy, there's no trigger. You don't buy necessarily on the blue one, but this one was because there was another one behind it. See, so this was get ready for demand zone. They came in, swept underneath it, and bounced. So I bought this. But technically what we wanted is for that to hold. Right? Now they put one in here, and he got immediately trapped. And so that might make this one show up even when it really doesn't belong. Oh, you know what they might be setting up for? I wonder if they're going to sweep under this and then come back. That might be what's going on. It might be getting triggered because of the lack of selling. Oh, you know what? I think I know what's happening here. They're not aggressively selling these areas, and so it's looking like there's more buyers than sellers, but they're also not actively buying it, and so they're going to wait probably for the seller to push it down here, and then this buyer who's been active in here is going to attack it. Let's see if they can get under this and the seller just disappears. Are they really going to hold this demand zone? That would be so funny. It's going to make the algo look amazing, but I don't get it. The price action makes no sense to me. They should take this low, but I wonder if we're getting these signals because it can also be used as a sign to look for the trap back in. But the fact that we got under this one is not good. I mean, we already knew it was bearish, but we shouldn't easily trade under this and then reject off of it. See that? How like this range getting traded under and then getting an aggressive seller out of it, that's usually bearish. But I don't want to sell it because supposedly there's a demand zone here. So you don't really want to sell into a demand zone. So really what's going on is we just have such a tight range and such lack of interest here that we're like these relative signs, these order flow signals are shooting off because there's just no one trading. And so like it's almost like it's Globex where like compared to who's trading, it looks like buyers are trying here. But as soon as a real seller comes back in, they could just crush them, because in reality, compared to what's normally happening at this time, there's like no one trading it. Yeah, blue arrow zone, and so we would to YOLO here, Hefe. You need to get back up here and see an algo signal of demand. So a green bar or a star coming back up after trading underneath them would be the closest thing to a YOLO signal. But it really needs to get under this. But you see all these green lines down here? That's previous pivots, which means there's liquidity down there. So I want to see them flush this and then come back and regain it. But we're getting purple bars now. Fuck. So now this needs to get taken back before I can even think about getting long. They might do it right here.
Order filled.
I'm gonna try it. It's fucked up, but it says to do it. Yeah, fucking stop at low a day. I don't think it's gonna work. But they did trap back into one, so let's see how successful this can be even when liquidity is poor. We'll see. What the fuck? Just erase the lines. I'm gonna try it. I tried it. I'm long. But we've got all these old pivots down here just asking to get their liquidity swept up. But demand zone, tested underneath, came back with an aggressive buyer. 7 out of 10 times this is working for 10 points or more. So I'm just going to keep taking it. And eventually it's going to give me 50 because it often does. But it usually gives you at least 10 to 15. And so I'm willing to take that slight risk for the chance of a pretty decent reward. I just don't like the location at all because of those pivots, but I'm going to do what the algo says. That's my job. What's the point of having it and paying for it and doing all the work on it if I'm not going to follow the damn signals, right? But the fact that there's just no, like, again, this should be popping off when they do this. When they test below and just, like, someone shows up aggressively, relatively aggressively, this should be, like, popping off. 10 points in 30 seconds is what you should see. And when you don't see that, like, you gotta wonder, like, what's going on with the price action? Like, why is there no one else following this signal when we know that backtests show that they usually do? 50 points, yeah, no, like that's usually what you get with these trap trades. A 50-point extension is not unusual with these trap trades. Not unusual.
Cancel.
Okay, so I got the first one off. I finally did this right. So I got the first profit taken. We're gonna see if we can get one up by like 60, and then we're just gonna hold the runners for 50 points, because sometimes that's just the low. And again, it doesn't make sense to me that they wouldn't swing the low. It doesn't. But the algo says buy, I'm going to do it. Because like I said, when these trades work, they work great.
Order canceled.
Okay, I got the other one filled, so now we're down to runners. And now I'm positive on the day again, by the way. Okay. Back to positive on the day. And now the question is, where do we want to get out? The obvious place to get out would be a sweep above 600, 11,600. That'd be a really obvious place to squeeze to. Right, back to that center. But let's just see what they do there, and let's yesterday's settle price is 25 or something like that. So I could try for like 21 in case we get just a massive squeeze. Back up here. Right there. What's that? 22. So let's see if I can get 20. That'd be fucking sweet. That'd be 80 fucking points. that'd be sick. So that would also be abnormal. Let me make that clear. That would be an exceptional result. And I have every right to exit the trade before that if it stops working. But yeah, I've seen these go crazy. Crazy. And in fact, if they come back in here and do it again with a green bar or another star, I will add back my 5 contracts. I'll keep doing it as many times as they want. Like I said, I don't know why there's a demand zone there, right above the low, like not under the low day, but above it. It doesn't make sense at all. But the algo is watching the order flow, and the order flow says people want to buy there. So when they do, I'm gonna follow them. It doesn't have to make
Order
sense.
canceled.
Oh fuck! Did I trail my stop? What the fuck? It trailed my stop to break even. Okay, that's irritating. I didn't think I had an auto trail on there. Sorry, guys. What happened? How did I must have gone high. They must have gotten high enough that they got the auto trail in there, and it didn't. It usually makes a noise for me to alert me that I'm supposed to put it in the right place. That wasn't even break even. What in the world? I swear I didn't hit anything. Hold on, let me check the configuration. Did I fuck this up when I was messing with it to do that ad? Start trailing when the last trade price moves 80 ticks into profit. Fuck, so it trails my stop. I fucked that up. So okay. So I don't have, I had it moved to break even, and I checked the wrong fucking box to actually trail the stop up as it goes once it gets to 80, so that I don't ever lose more than 64 ticks from the high water mark. Damn. Okay, let's see if it gets me back in. That sucks. That pisses me off. I should still be long my runners. I just checked the wrong fucking box. Cause see, I'm trading one. I've got one of these I trade on Ninja, and then the other one I trade on Rhythmic, right? And now I'm down to negative 850 on the day, which is like, But that's okay. We were negative 200 something before, but like, it's I should still be long the runners, and so I have 2 different configurations. And I can trade the same account, but this way I can have like 2 different setups. One for adding to trades and one for initiating trades, right? The one for adding to trades, it looks like I had a trailing stop on it that literally trailed the stop exactly the amount that I put in for the initial stop, but from the high water mark, with the idea that they have a trailing drawdown on the accounts as well. And yeah, so therefore it won't give back, you know, the trade will never go green to red just by holding runners. And that, I mean, it makes sense, but that should only be on ads, not on my initial entry. And so on my initial entry, what I want it to do is go to, if anything, trail break even, and then alert me when that happens, so I can decide if I even want that. But the problem is on the Rhythmic one, I don't have an alert set, and so it didn't even tell me that it was trailing the stop, and I wasn't paying attention. Fuck. So, I mean, the good news is it turned out to result okay. Like, I actually sold at a spot that it's fine. Like, I sold higher than we are right now. But it's, like I said, I need the experience of having good trades, getting good entries, taking profits, and having free runners. And that's never going to happen if I trail the stop that tight. Never. You'll never get a 50 to 80 point run if you insist on not giving back 15 points on your runners, right? Like, not realistic. So I need to fix that right now. And what I want is, so the only way that would work that would have to be a lot higher. If I want to do it trailing, see, I don't know what to do about this. I could do it like once I get 50 points or something like that. We could do that. Let's do it that way. Man, that's frustrating. What time is it? Okay, good. So if I get on tilt, it won't matter because we'll be closed. Because this is the kind of shit that gets me reeling. And it's like, I did everything right, and I still didn't get paid by my runners, right? Like, I did, but if this does go 80 points, like, how frustrating, right? To do everything right and then just, like, have that set up wrong so that I don't stay in the trade is, like, unacceptable. Oh, Simon, if you're watching this, I am so sorry. I fucked that up bad. God, what a irritating execution error. It's like, yeah, way to show that this works by doing everything right, getting into the trade, and then exiting for 20 points when it goes like however long it's gonna go. Super embarrassed, but it just caught me off guard. Like I said, I guess I could have just re-entered, but then I'd have to explain that when we do our review and be like, oh yeah, I actually entered at the top of this rotation because it got me out, and then no, it'll just be a learning experience. Where will it go? I hope somebody else got long. Please tell me someone else took that crazy trade with me. It made no sense at all, but like I said, I did everything right getting into the trade. And I swear I didn't pussy out of it. I just had this set up to trail here. So what I did wrong on Rhythmic, you can set brackets to make sure that I don't get here. So make sure that I don't get like fucked. You know, you need like a stop order and targets. So I had these targets set, but this one is supposed to be for adding to trades. I have one account that adds to trades and one account that starts trades. So in the end of the day, right, like it works out. But this way I can have this running and this running at the same time without having to pay for the duplicator, right? I just have to manually trade them differently. But that way, this one can add to trade. So I can get in like 2 minis on Ninja, right? On account number 1. And then on account number 2, when I take profits, when I take one off and it pulls back and it sets me up again, rather than having to take 2 more minis, I can be ready with this account to take 8 micros. And then this is my add, and the other one is the what's it called? Is the runner, and this is the add. And so the way it was working is this one would take profits as we ran up, and I would have my runners with the stop and break even. But I had this one to start trailing the stop when the price moves 80 ticks. Right? That's not very far. That basically means just after my second take profit here, I'm trailing the stop. So if you're gonna do it, this is gonna need to be like much higher. Right? At least like 120 maybe. Or you can do this and this. That's what I meant to do. Move to stop order to break even once you traded to 80 points. 80 ticks, sorry. 80 ticks. Once the last trade price has moved. Move stop orders to break even plus. Oh wait, plus. That's not what I meant. Plus 0 when the stop has moved 80. Okay. So yeah. If I thought it was this because that's what this one looks like. Like I said, it's just my own fuck up. So see this? This is different. It trails to break even plus 2. And that's what I thought I had, right? But instead, I had a different configuration on Rhythmic than I did on Ninja. No, I didn't get that 50 points FA. No, so I entered here. Yeah, I swear you're trying to tilt me. It's gonna go 50 points, but I got trailed out of it on my runners. So I got in here on process, right? I took profits into the push like I'm supposed to as it gets aggressive. I said I was gonna hold runners for 50 to 80 points, and I had it set up to trail my stop 64 ticks of retrace, which happened in this bar because 60 or whatever it was, 60 or 80 ticks of retrace is nothing, and so it trailed me out of my two runners, and so I missed this, and I'm now flat because I don't have an entry here, and when I send when I I pay for coaching, so like when I go to coaching, I can't be like, when I send my executions, right? Like I can't buy this. Like I will get like pummeled. Like he'll fire me. Right? That's not a non-process. That's a fucking breakout buy. Like the guys who buy this are the ones that we like profit from when they lose, right? What I want to buy is a pullback. So I can't buy this. If I do, I'm in deep shit, right? Like I'm accountable to my coach. But getting out of the trade was an execution error, which is embarrassing, but like, it happens. It's just the result of having bracket orders and trying to manage risk. I just had the wrong fucking box checked. What I thought it was doing is trailing to break even once it traveled 80. But it was ticks, not points. I do not trade breakouts, Hefe. No, sir. No, sir. Not on futures. Never, ever, ever. Nope. Breakout traders, their stops are my bread and butter. We hunt breakout trader stops. That's what we do all day. I am not going to buy breakouts. Nope. Like, I'm not saying it can't be bullish when it breaks out. I'm saying my entry can't be here. Sure. Okay, so what you got to do, if you want to get a free pass to the room, you got to email Simon at tradeandperform@gmail.com. Email Simon. Tell him you follow Red Ben on Twitter. And Ben promised you a free visit to the room. Okay? You'll be insta friends with Simon by saying that you know me, and yeah, he'll take care of you, and you can come see the room for free. And he'll answer all your questions about software. Now, technically, he has this software, which is what mine is based off of. It's just a lot easier to learn. It doesn't have as many signals because you don't need them all, right? You can just you start out by learning how to buy purple bar star and getting 15 points over and over again. And how to short pink bar star or pink bar orange bar and learning how to get 15 points over and over again. Purple bar star, right? He'll teach you to do that. And then once you start making money with it and you know what you're doing and you want to add to it and you want to figure out where to get the 50-point runs, talk to me and I'll add. If you've got this software on your desktop already, I can build the missing signals. Yep, you bet. You bet. The problem is if you don't have this software on your system, my chart book won't work on your Sierra chart. So Hefe asked, is a breakout going with the trend, direction, and momentum? Yes. Right? The direction of the breakout is fine. The problem is the executing your order as we break out is not good risk management. No, because I'm still buying. Going with the trend would be being a buyer in this situation, right? Do you agree there? Trend is bullish on this short time frame. So what I'm saying, I'm executing my buy on the pullback. I'm saying I'm not buying this. I want to buy down here. I'm still a buyer. I'm not going counter trend. I'm waiting for them to give me the entry at the spot where everybody puts their stop loss when they buy the breakout. Because, yeah, those stop losses get hunted. So a good example of that is this is your quote unquote support. Here, I'll show it to you on the, it's easier to see on the candlestick chart. Here. Easier to see it. I don't use the 1 minute, it's too fast. So you could say, okay, double bottom, right? Looks like it might be bull. Here's your breakout, right? That candle right there, right? That's your breakout trade. Buy that. Your choices as a breakout trader are, where do I manage risk? Do I put it at the low? You can if you're okay taking, let's see, breaking out at, let's say 70, stop at 20. If you're okay having a 50-point risk, right? You can put your stop here. You better make that 50 points a shit ton often, right? So what most people do when they buy breakouts trading futures is they put it here. They put their stop at 50 and they buy 60 because they want that 15 or 10 point stop. So instead, rather than buying the breakout, what I do is when they pull back and they sneak underneath that green line and then they show aggression back to the buy side, oops, I will be the buyer that buys here when all of the breakout traders give up. Right? So the trend is intact, but those who aren't managing risk well basically have no choice but to exit or risk more, right? So it's like the market is making them pay more for the extension, and most traders are not willing to make that appropriate stop because it's a big investment. So instead, what they do rather than fixing their entry, they cinch up their stop to here, and then market says, I'll take that. Right? And so we execute here. Now, the funny thing is that the location can be the same. Right? The location can actually be the same location, technically. But the where in the rotation it is it at the top of the rotation or is it on a pullback, is the difference between managing risk and not managing risk. Well, managing risk appropriately and not managing risk appropriately. Because when I buy on these pullbacks, like when I bought here, right, I can put my stop at 28 and my entry is at 42, let's say, if I market it in here. So it's not a big risk. Whereas the guy who buys this, because they wanted to wait for the breakout, they're getting long at like 60, and they've got to have that 50-point stop. So, yeah, sometimes they make 50 points, but a lot of times they get stopped out before that, right? And so the question is like, where do you take profits now? Because you've got a 50-point risk. Do you need to see 100 points now? How often is that going to work? Probably not very often, right? But when I've got a 15-point risk, I can take profits here and here like I did, or here and here, and now I've got a free ride for as long as they want, and it's literally free because I've already bought my risk. I've paid for my risk on this one. When everyone else is waiting for the breakout, right? I'm actually paying for my risk so that when the breakout works, it's free for me to watch it. Does that make sense? Like everybody else has to use this huge risk. They have to risk 50 points to see that breakout and be long. I literally risk nothing to see that breakout because I've already paid myself for my small risk because I've taken 6 off and I've got 2 left to run. And so I can leave my stop here where it belongs down at the bottom, 1128. And that those two contracts I can just hold as long as I want. And even if it comes all the way back and stops me out, the trade, the 8 contracts, the net of it is positive. Right? I still made $250, even though I like fucked up the execution and got out of the runners before the breakout. Even like it's as if I waited for the breakout and I didn't take any profits and I let it roll all the way back on me. Right? I'm still up like $200 and some because I was down like almost $300. And now in that account is down. I'm down like $8, right? So I made like 200 something, but I could have held the runners for free, more or less. Like not for free, but without having to turn the entire trade net. I would not have to turn it red. I would have obviously had to give back my potential profits, but that's paper money, right? That's paper profits. It's not like solid profits. Like I took solid, real profits there, and so my paper profits are at risk. But even if I lose those paper profits, net, the loss, the real loss, is smaller than my real gain. The location before the double bottom, it did have 2 purple bars, and that is not a good buy. Let's take a look. Talking about this right here. Is that what you're saying, Hefe? This one? These 2 bars in a row. The purple bars are not entries. The purple bars indicate that buyers are giving up there. But then after the purple bars, you had this arrow. So you could say that this was an entry. I said I was going to skip it. Is that what you're talking about? Yeah. So the blue arrow here after the purple bars does not have a star, and it doesn't, if you look on Simon's, it's not an entry on Simon's. It's just this, right? So I know this well enough. I've memorized all these signals well enough that I know which ones are valid entries and which aren't. I'm sticking with this system for my actual entries. It needs to trigger on this system for me to get long. So this is not an entry, but this is the star, right? Also, a green bar would be an entry if it's in the right location. Like this, even if this didn't have a star, it's an entry, right? On mine, the blue arrows here identifies that it could be a demand zone, meaning that there's buyers there that could support price. But by itself, it's technically not an entry. It would need a sign of aggression like a star. So that's why this one here was an entry and this one wasn't. If you technically, this one, like, it's not a terrible scalp, but it's not a true high odds entry. This one is a high odds entry and this one is a high odds entry. The blue arrows just say I can mark this area, and if I get tests into there, if they test into this and then they come off with a bar that closes with a star or a green bar, or in other words, on this one, if I transpose that level here, it's this bar here. So now any entry on this system that interacts with this zone, if it comes back up bullish, it's a high odds entry, right? It's the arrows I've added to show me where support and resistance zones are. So on the opposite side, you see these yellow arrows? This one and this one. Those aren't on Simon's chart, right? Because he doesn't want to confuse people. He doesn't want to have too many things. But I've added them because I like them. Because what it tells me is that if I get a short signal out of here, like if this is a star down or an orange bar down, this one, and it has its wick inside of this range, that it's probably going to go to support. It does not mean it's going to break the low, but it would mean that it's probably coming back to support, right? And then what we'll get is like potentially this. You know, you don't know which way it's going to go eventually, but if we get an aggressive seller out of the supply zone, which is what those arrows are, is the supply zone. If we get an aggressive seller out of it, it's an entry, even if I don't have a purple bar right before it. So it's just like it's another way to find trades with Simon's system, right? I'm still entering in the same spots as Simon's setup is telling me. I'm waiting for the trade and perform algo to signal me into a trade. I'm just filtering out some of the more aggressive trades and waiting for the ones that I know have really high odds. So like if this one's a star or an orange bar, because of the location and because on mine I know I have arrows there, yellow arrows there, I can scalp it short. And it would show up orange or a star down on both systems. Right? Because all this is just Simon's system with extra stuff that I've added myself. But if they don't defend this and instead they just go higher, it's not going to come back. So I could technically short here and look for support. Let's do it. If they give me the signal. We need an orange bar or a star. We can watch it on here because I know what it looks like on mine. How much time is there? Oh, not enough. Not very much time. We'll take it anyway. Whatever. Did I have this right now? Yes, I have it right now. Okay, let's see if we can make this account green. So it needs to close orange or a star, and then I can mark it in, or I can get in anywhere in that supply zone on a retest, but only after it closes. It must close bearish, and it must have that signal, a star or an orange bar, which are like the only two ways you really get in Simon's system, which is much more simple than mine. I just took his and ran with it a little bit. Because I'm not good enough to like scalp constantly. I need to know where the chances are to get big extensions. I would rather, I'm a more conservative trader, and I would rather wait for the spots where I know I have a chance to not only get 10 to 15 points, but to maybe get 50 or more. Doesn't mean I always will, but I really don't want to be in the market unless there's a chance for that to happen. That's all. That's just the way I feel. Like I said, it's not the way everybody trades in the room. Many people just take all of the signals, you know. So if you have a star with a purple bar next to it, it's you just buy this, you know. And then if you got a pink bar followed by a star, you'd sell that, and they just go back and forth all day and make money. But like I have a hard time with that because when it starts to stop repeatedly, I get flustered. So I want, and then I what really bothers me is when I get out at 15 points because I don't know whether or not it's going to go further, and then it does, and I feel like I got like cheated, you know. So instead, I've identified where I want to push, and I'll just wait for those locations, and then wait for his system to give me the entry there. So it helps me with my extra signals helps me with timing and location, and then his signals tell me when the actual execution is. So see how it's not an orange bar, and it's not a star. Wait, why isn't it orange? That should have been orange, no? No. Oh, okay. No signal there. It's watching the footprint. This is why I trust the algo and not me. So it's saying no entry. There's no signal here. Purple bars are not an entry. Purple and pink are not an entry. It's only the stars have to, like I said, it would have to be this bar being a star or this bar being an orange bar. That's the only way I could get an entry there. Doesn't mean it's not going to go lower. I just don't have a high odds way of knowing that it's going to go lower. But if they come up here and then reject again with a star, it's all good. So see, they got star up. This is why it didn't signal me to get short here. Now this is purple bar star. This is bullish. But it's into the resistance zone. So like everybody in the room, in Simon's room, is going to be buying this. except for me. I will skip it because I think the chances that we break through here is less likely. But like I said, it's still high. It's just not high enough odds for me. Right? Because most of the time when it does work, it gets stuck in here. But yeah, some people don't care about that. They just want the 15 points. And then you can just buy every one because most of them work. But I'm going to wait because I know we're trading right into a supply zone. So I would have to, I would be pressured to exit the trade. And if it went on for the 80 points, I'd be pissed. So instead, I just skip it. But it is bullish. It is bullish. And the way it's supposed to work is you're supposed to buy it. Right? But I know most of the time it's going to get stuck in here. So it'll work as long as you take your profits appropriately at like 10 and 15 points, it'll work. And then you can hold your runners if you want, but I know that the chances are is that this is actually a supply zone. So they would have to blow through it, and then they could bounce, and I could get long in the same area anyway. Because those supply and demand zones tend to be retested. Not always, but they do tend to be retested. So let's see. It's the end of the day. Keep that in mind. Like, it's the end of the day. So, oh, that's a short. So it's a star coming out of there. Oh, get over there.
Order filled.
Okay, so I'm short because that's a star with a wick inside of the supply zone. My stop has to go above that bar, and I'm gonna try to get 10, 15, and then runners. I'll take profits at 10, I'll take profits at 15, and I'll take profits at runners. Stop has to go at like 76.50 or so. Oh, fuck, I'm getting short right into MOC. That sucks. It could just be like, whoop, and spike me out because of MLC, but whatever. Short is valid. I'll take it. So I want it to get into here, and then I'll hoard. I know.
Order canceled.
Okay, so I got my first risk off, which is great because there's still 2 minutes till MLC. If I get an opportunity to take my second one off, I
Order
might.
canceled.
Yeah.
Order canceled.
Nice. Okay, so I still got 2 more, and I'm gonna leave these. Now I'm gonna make sure my stop does not get trailed until I get much higher. And if it does trail, it's gonna go to break even. I'm gonna do that right. But now we've got 160 on the day and -2. I mean short 2. And now I'm watching this to try to think, where do I want to take this, right? And now I know there's a chance that we could go down a lot further. So because it's set up into that supply zone. So like if I could get it to come down to like 1850, I'd be pretty fucking happy. So I don't think that's gonna happen, but I'll be ready for it if it does. There's just not a lot of time left in the day, you know. MLC in they're gonna no. MLC, as I say, in seconds. So that was MLC. It was to buy, and they got a little pop, and they did not get to my stop. It did put me under a little bit of pressure, but I did not trail my stop for a reason until after that. Now I will trail my stop to this yellow line. So now my stop's gonna be like 68. Because if they blow through that, it's probably done. But there were signs of aggression to the short side. There was a demand zone here, but I told you before it looked super sketchy. But if they spike up through this, I will just exit, basically for a small. It'll be a net win, but a small loss on my runners. So let me just see what it looks like on mine. Make sure I'm not missing anything. Yeah, see, it's trying to bounce off this demand zone, but this is all good though. So we got the star. This is where we got short here. Took profit here. Took profit here. They bounced. And now we're hoping they roll down to 11.5, 18.50, but chances of that happening in 10 minutes, not great. But we'll see. It could. NFP tomorrow, I mean, there's going to be a lot of people, you'd think, you know, adjusting their, like, rebalancing and shit. So, and like I said, this low sucked. This was not auctioned well. So I do think this low can get swept. I don't know what happens under the low though. You know what I mean? Like, no one knows what's down there. I can see buyers down there, but it does not mean they're going to be there when we get there. Right? But I'd be super, super happy with a 50-point trade here. That would make me very happy. Especially since I missed the last one. Well, I got 25. I got half of it, but not the other half. I'm glad I stayed on process and executed another valid entry, bringing both my accounts to green on the day, which is definitely a good feeling. You'd think they'd just take that low, you know, like that's the most sensible thing to do, is just sweep this. I think the hardest part is deciding what the hell to do once that happens. If they're gonna bounce it, it's gonna be off of this supply zone right here. But what are the chances we get another fucking higher low? Like, doubt it. And we saw this before where they try to bounce it right off of it with a star and it fails. I'm gonna have to watch for this. It like taps the level and then rolls. We saw that earlier today. I'm gonna look for that. Where it doesn't go deep into the supply zone. It just like, they try to like front run it a little bit, and that seems to result in a rollover more often than not. That would be awesome if that's consistent. I don't know if it is, but we saw it once today. And like a lot of those little nuanced things, like they change when the market like adjusts. But like once you kind of get that feel, you can almost like use it as like an arbitrage. Like you just wait for that to happen, and you know that like you can short this bounce. If it's consistent, and then eventually it stopped working because people figured out. But yeah, like if you look, it's here. I don't have this drawn right. This is like right at the top. So see how this star bar like touched it, but bounced right off of it, right? You'd think that's bullish, and I thought it was before too, but I think it actually means that it's probably gonna fail, because last time it failed, but I don't know if that's consistent or not. One or two samples does not make a tradable situation, but it's definitely something to watch for. You want to look for those patterns, because if they are reliable, oh man, then you just hammer it every time you see it until it stops working. Again, this should be going a lot faster. Usually when sellers come into the market, you see things happen fast. Usually you get speed, and we're not getting any speed. So it's almost looking like they are somehow going to hold this. I don't know how, but it's really weird. Like, this should just be cratering. Like, everyone should know that low is toast. But maybe I'm the only one who thinks it is. They might come up and trail me out. Well, that's frustrating. Taking a little heat. They might come get me. This is the risk of trading the close. Low liquidity. I can come up and squeeze up and then roll. Like I'm pretty confident that low is going to go. I just don't know how much risk I have to take to make it happen before the bell rings. They may hold it for the next 5 minutes, you know, and then just wait for fucking Asia to take it. Or London. I'm blown away how those demand zones keep working, despite the fact that there's like no technical reason for it to hold. It's like it almost pisses me off that it works. I should just be satisfied with the fact that I could see it, but like, why in the world is someone buying that? Okay, it's still short. They didn't get me yet. Back to my entry point. Flush it. Come on, big seller. No star? We want a star here. We need someone to continue to. There we go. There we go. Bye bye. Pink bar, star, see ya. Everybody in the trading performer room just shorted. No, most of them don't trade the close, but that is a valid sell signal. Thank you, boys. Come on, a little more. A little bit more. Don't be like that. You got 3 minutes. No one wants to hold this. I'm wondering if 518 might be not aggressive enough. Maybe I should be waiting for lower. Am I just happy with 50 points? I mean, it's the end of the day. Three minutes. Technically, it could happen after the bell, and it's still okay. I can stay in the market for another hour or whatever. Man, who is buying here? I got the pink bar star. It really should roll. At least 15 points. We should get this bar to close bearish. Not every time, but a lot. So they got aggressive seller with volume. Buyers gave up on continuation. It's all bearish. Okay, so now if we get volume back up here, it has a chance of bouncing, but notice there's no more blue arrows down here. Right? That support, that guy who was creating that support zone seems to have left. Which is good news for us. Wow, this has suddenly become a pretty good day. Do I just want to cover into the close? I hate, because sometimes the bell rings and like the algos just like trigger in and it's just like like 30 points like right there, you know, but you don't know which direction it's going to go. So I guess probably the right thing to do is to trail stop a little tighter. Let's do that. Let's just, like, I got my stop at break even, but I'm almost thinking like maybe let's just put it at like 50. And that way if they like instant rush it higher, like I'll be profitable in the day. Big time. Not huge, but like considering I was down almost $300 earlier. If we had more time, I would easily just hold this. Because they have to get volume above this before it's even going to look bullish. Ugh, they're not going to do it right now. See, if you were in the trading perform room, trading pink bar star, right, you'd already have most of your risk off. See that? You've already gotten 1-to-1. And so you'd be down to runners. Now, this is one of the times where I would have actually traded with them because there's a chance that it goes. Okay. Come on, flush. There's just no reason to cover. I don't know. There's nobody trading this. Like, no one's interested in it whatsoever. We'll take a look at the footprint when this trade is over, you guys, and I can answer your questions. But I think it's helpful to take a peek at some of these spots that we took trades in together and see what they look like on the footprint, so you can sort of understand like how the algo is saving me time and interpreting things that I would not be able to process fast enough. But I will show you. Should I just? I'm gonna hate myself if I exit and it drops. No, let's get out. I'm done. All right, I'm gonna take a quick break. I do think it's breaking down, you guys, but I'm happy with my results. So here, let me just show you how we did today. See if I can show you this without my account numbers. So traded in my 2 accounts. One of them pre-fees was almost 300, and the other one almost 200. Did pay a bit of commission fees because I traded micros today. Yeah, net P&L all in all, about an average day. You can see my win rates are average. That's what I usually get, you guys, with this system, is above 70%. usually if I drop below 50%, it's a losing day because you can see how quickly I take profits. But this just shows you how even trading micros, like remember, you guys, the room is $95 a month. Okay, right? And now this is like I've done this. I don't know how many times in the last week. I've shared my end of the day P&L with you guys, and it's pretty consistently right around $300 to $700. So it's and like I said, I'm right now trading micros. So yeah, like it's these are consistent win rates, right? You also see that like I didn't trade that much, right? Like it's not like I'm putting in 70 executions, and most of my winning trades I'm taking 3 exits. So you can take the winning trades and divide it by 3, or at least 2, and that's actually more accurate of like how many actual entries we're getting. So, in reality, we're not taking but maybe 5 trades, right? Yeah, well, 5 winners, sorry. So it's actually it's pretty good. It's pretty good. Like 5 locations, I should say. So let me and then many of those losers, right, are actually runners getting stopped out. Okay, so the chart book. So what I would recommend, if you're interested in trading with us, what I would recommend is start out by talking to Simon and just taking a look at the room, right? And then you can get that for free. You can get a free look at the room and see what it's all about. Get his morning prep, see Simon's screen, see this, hear what he's doing, all that stuff, and you'll get access to the Slack room. You'll see what everyone's trading, right? You can get a free visit if you just email him and tell him that you know me, and he'll give you a free visit. If you just want to stay in the room and you want to be able to see his screen and just have basic membership, it's $95 a month. Okay? And you can see his screen all through RTH every single day that it's open, have access to everything. You just won't have the chart book on your desktop, right? The $95 a month option is really good for someone who does not have Sierra chart and doesn't want to learn it, or for someone who's just new to following a system and just wants to make sure that it actually works, right? Once you get it working, what you're going to find is you're going to want to be able to go back and back test this. You're going to want the chart book on your desktop. And so instead of $95 a month, it's $250 a month. So $250 a month total for the chart book plus room access plus Simon and crew, right? $250 a month. So it's not $250 plus $95. It's $250 or $95, right? It's, do you want to just have access to his screen and just like when he's trading be present, right? And to learn and stuff like that? Or do you want to start digging into the actual algo and be able to customize it? Now, if you are a quote unquote premium member with the algo, once you have that, you can DM me on our Slack, and I can help you build any additional signals you want, including the ones I've built. Because what you'll see is that my studies, I have significantly more studies on here, like 120 some, whereas he's got 40, right? You don't need all of this to be profitable. Okay, I traded this for a year and scalped with him, and it works great, just how it is. Which you'll see, even with just basic membership, $95 a month, you'll see how he scalps, and you can do it and follow along, and you'll do fine, right? But if you are the type of trader that I am, and you don't just want to be like scalping 15 points all day long, and it bothers you when you get out of trades and then it goes for 100 points and you didn't see it coming, I can help you build these extra signals that help me determine when it's a really good opportunity for a big move, or when the trade should be abandoned, right? Because the opposite signal went off, and so therefore I should abandon that trade, and the likelihood that it's going to go any further than 10 to 15 points is lower. His system will tell you when to enter, but it won't give you an exit unless you just follow a process of like taking profits um, consistently, right? But it's a straight up just order flow uh, algo, no nonsense, works beautifully, and it's simplified, right? So that everyone can learn it pretty quickly. It is still a lot of colors and stuff to learn, but the good news is you only have to learn them one at a time. Like for instance, if you start out by just looking for pink bar star or purple bar star, those can pay you all day long, right? And then once you start to get that, then you add another one, right? You might add another signal, another pattern, and so you learn them one at a time until you master them. And then, but like I said, eventually, this just it wasn't enough. I was getting frustrated by the missed opportunities, right? And so I built on it. But if you are a premium member in the Trade and Perform room, I will not charge you anything to add my own signals to your chart book, right? If you're not a premium member, this chart book will not work on your desktop because you don't have the DLL required for this. And my signals are based on his signals, right? It's just adding some things to it. So you do have to be a member of the Trade and Perform room to get access to mine. But once you are a premium member, the $250 a month is all you'll ever have to pay. I will not charge you anything and I'll just hand you the extra stuff, because I want you to have it. If you're trading with me, and you're going to take trading seriously and actually use it, as long as you let me know when you find new things, new ways to use it, and you share what you're doing in the room best you can. I'm totally cool sharing it because, like I said, I wouldn't be doing this without Simon doing it. So if you're in Simon's room, I know you're in good hands, and I'm fine handing you anything you want. But you do first need to be a premium member to get my chart book. But like I said, what I would recommend is just do a free visit. Email Simon, trade the letter N perform at gmail.com. Email Simon, let him know that you watch my YouTube and follow me on Twitter at Red Trader, and that you want to see what the room is all about. You'd like to see the algo and learn about it, and that I told you that you could get a free pass since you're a friend of mine, and he'll do it, and he'll answer your questions and everything he can tell you about this, right? And like what his services are, and you'll be able to see how it all works in the room and how things work. And then if you decide to join and you want to eventually get Zero Chart and get the premium membership, let me know in the Slack channel and I will hook you up with the rest of these. So let me just run to the restroom, you guys. I'm going to come back and we're going to review the trades I took, and I'm going to show you on the footprint what the algo saw, so you can get a sense of just how powerful this is. Okay? So I will be right back. Give me 2 minutes, and I will be right back. Alrighty, so let's take a look at this. So let's back up to lunchtime. Where was it? Right here. This was on the candlestick chart when we were stuck in this zone here, and I said executions in here might not work, and that we really want to be getting short up here and long down here, right? So that was my analysis of the location, and that was 1 o'clock Eastern, so 12 o'clock Central. This is in Central Time, because Simon's in Central Time, so I keep it to be the same as him, so when he, mentions things, and also so that when I send him my executions and stuff, that he can easily want to make it easy for the coach. You don't want to make when you're just a regular retail guy and you're like, I don't know, like Simon used to run a hedge fund. Like I'm not going to waste his time. You know what I mean? He's been doing this since he's been a trader since the '90s. He's got a lot of experience, and the last thing I want to do is have to explain to him why my thing says 10 o'clock, but it's actually 12 o'clock his time. So we just leave it on his, and that way I can easily there's no confusion. So I believe I started the stream right around here, and so that is like, let's say 12 o'clock. So on the delta profile, we're going to back it up to around 12 o'clock. I'm going to make it smaller. Okay, now what we're going to see, let me make this like, whoa, not that. Sorry. Like this. Okay. Good. All right, so here is side by side footprint, algo, right? So the first thing I said, where was that big drop? Right here. All right, so Simon caught this. That was beautiful, by the way. If you're watching, Simon, well done. I missed it. It was fast. Let me just show you what that looks like. So on Simon's algo, what it looks like is pink bar, engulfed by an orange bar above this channel. Okay, that alone is enough to get Simon in because he's aggressive. For me, I wanted a location here. Whoops. But I didn't get it. But let me show you what Simon's seeing, or what the algo's seeing, I should say. So it's here, right? So the algo triggers when this comes in. And so what you'll see is as the pink bar, now this is not Renko. Okay, these are like volume bars. Every bar has 2,000 volume, but you're still gonna understand it. So I think if you know how to read footprint, you will. So you'll and Simon won't do this, but I think it's fine. I think it adds value to the algo, honestly, to show you how it works. He's a little bit more secretive about it, but I get it because he spent years and years and years optimizing it and doesn't want people to try to duplicate it. And I'm not showing you this so that you can duplicate it. I'm showing you this because it's how it works. And even if you try to duplicate it, it's not going to be perfect. But what I've tried trading off this, and it's hard, right? It's tough for me anyway. NQ trading off the footprint and the DOM is really tough. But what the algo is seeing is that we got here. Let me make this a little bigger. We traded up here. Whoops. And have essentially a low volume node. See that little volume node there? Where price is rising, but volume is just not rising, right? And what was happening on the DOM at that very moment, according to the pink bar, is that sellers were actually pulling their orders. So if we replayed the order book, right? What we'd see is there might have been like 90 orders up here or something, and they either moved their order up, meaning they pulled their order out and put it somewhere else, or they just disappeared. And as they did so, buyers marketed in. Okay, sorry about the beeping, and just the market's moving. Let me guess, it hit my target. It did. Wah wah. Okay, that's okay. That's fine. But yeah, so buyers executed as sellers were giving up or moving up, right? Creating the pink bar. Then we trapped a seller, which is this, and this, right? And as we came down, we saw volume shifting lower. That's the orange bar. Okay? Now, by itself, none of those things are enough to sell. But when they're all together, and particularly when it occurs above this channel here, where most of the volume has been, right? And it's been above. See, this is the same thing, basically. Pink bar, orange bar with the diamond engulfing it. Same thing. Above the channel. Right? So, you can go down there. And you'll see the same thing. Buyers getting trapped at the highs. People pulling their orders, probably, up here. And then a big volume shift to the downside, right here. Right? So if you know how to trade footprint, and you can trade in fast markets with footprint, the algo is going to make a lot of sense to you, because it's just going to mean that you don't have to watch the footprint so closely. You just have to wait for the algo to confirm that it's there. My problem with following the footprint was never that I couldn't understand what was happening. It was that by the time I processed what it was I was looking for and trying to determine whether or not I had enough evidence, the market had moved. Whereas with the algo, I know the moment I see this combination that I can be short. And then the other thing I used to do with the algo, or I mean without the algo, is I would notice this on the footprint, right? I'd be like, oh, I should probably be short here, right? And then when they would reoffer, I'd get spooked because I didn't have an objective way to decide whether or not I wanted to stay in the trade or not. And I didn't know like how to know that the trade was broken. So I'd like, if I'm watching like the DOM here and like some big order comes in here, that's what this guy is here. Like some big buyer came in, right? We saw it here too. They shifted volume higher. If I was just watching the footprint in the DOM, I'm going to just get out of that. This is hard to hold through, right? I don't trust myself. I don't trust my read. But with the algo, I know that the back test says price just can't get above that. And then 70% of the time or so, it'll go at least 15% lower. And then when you get this, it's like, okay, buyers giving up. See all these holes? They used to be buy orders, and now they're not, right? So now I'd have to re-enter. If I was trading the footprint, I'd be like, okay, short, give up for a $50 loss. Oh shit, short, right? That's what my trading looked like. And so the chances of me getting a 70 to 80% win rate were like, I never did it. I'll be completely honest. It never happened, right? It didn't mean I always lost. Like I didn't always draw down. I knew what I was doing. I wasn't confident, right? I didn't know for sure that like, this is a trade that I know works this often and I can go prove it. Like I could literally open up any day and find this exact same pattern and I can say, I know what the footprint looks like here. And I know probably what's going to happen after that. Right? Whereas if I just said, take a picture of this and look for it, I'm sorry, my brain just can't do that. My brain can easily look for this pattern, right? But I don't have like a kind of memory that can like picture what this looks like. And as it's building live, be like, yep, that's good enough to sell. You know? And like I said, especially when then the very next bar, like, does that invalidate it? I don't know. Like, does it? And here I know it doesn't. You know, I know it does not, that this is actually very normal, because it's got a diamond on it. And the diamond says this is free reign area here. And in fact, it means even if you get stopped out, you need to take it again if it comes back again. So the only issue with knowing that is that it does mean that I've had to learn that it's okay to be wrong the first time, as long as you are confident that you have your process in place. Because a lot of times, well, not a lot, but sometimes you'll get the same signal. See, here's the same thing in reverse: purple bar, green bar, right? But you got it here first, and then here. See that? So if you were looking for that over and over and over again, and that's all you were doing is just buying every time you got purple bar, green bar, and you didn't have any other criteria about location, technically you could lose twice before you win, right? And that frustrated me, right? I didn't like, because I wouldn't do it. I wouldn't trust it. I'd buy this one, it would stop out. I'd buy this one, it would stop out, and I'd be like, well, I guess I was wrong, and then they'd go, right? And I get infuriated, and I couldn't handle it. Like, I was not good about this kind of thing. It doesn't happen very often, but it does happen, right? And so Simon's way to deal with it is, he says, skip the first one, be okay missing it if it goes, and wait for the trap entries, because those are usually going to work. Sometimes you're going to need to, sometimes you're not. What I've done, because like that works, but it doesn't work as well as I want it to, what I've done is I've added signals like these arrows here. And these arrows, the blue arrows, need to be there for me to even think about longing. So yeah, I'm missing this, right? Simon gets paid 30 bucks, or sorry, 30 points, right? Which pays for this stop and then some. So that's one of the reasons it works for him, is because he's aggressively buying these and he's aggressively shorting this, right? So like he's like up 50 points and I'm still flat, and then he takes a 15-point loss and now I'm down on the day. And that was frustrating to me because I wasn't willing to be aggressive enough to take all these. And then I take this one and it stops and I get pissed and I stop buying it and then it runs. And I'm like, oh, I'm tilted now, you know? And so instead, like I said, I've added these additional signals that kind of say, look, if you want to avoid the aggressive plays, just wait until you have evidence that either there's a support zone down here or that the sellers are getting exhausted. And so the chances that they're going to not hold below the low is increased, right? So for my system, and again, I'm the only one who has it right now, but if you guys are in the Trade and Perform room and you already have this on your desktop, you're a premium member or whatever, you got it on your desktop, I can help you build this. But it won't work if you don't have Simons. So the way this works is if the blue arrow is on a down bar like this, what that means is that underneath the lows, underneath that low, if they come back and attack it, it's probably safe to buy, right? This one did take 2 tries. The very best of them have another blue arrow here on an up bar, because the blue arrow on the up bar signals that this actual bar where the blue arrow is, this range somewhere in here, is a buyer waiting to get filled here, right? So on the footprint, oh, you won't see it on the footprint, you have to see it on the time and sales, but what it is basically someone down here did not finish their order, right? Like an iceberg, basically, if you will. So they got filled, or sorry, they got partial filled. They left their order there, and the market left without filling their order, right? You can see it on the DOM. Like, you don't necessarily need the signals, right? You can just wait for that if you're good at reading the DOM. But I'm sorry, like the NQ DOM, when it's fast, it's been slow lately, but when it's fast, holy shit, is it hard to read. Like, I get fucking dizzy trying to read the DOM. I don't even look at it anymore, right? It's all been programmed here now. I don't even have to look at it. Like, it just hides, right? All I use it for, I don't even fucking pay like on the air. I don't pay Ninja for anything more than I have to. I don't even get the depth, right? I have it on Sierra charts so so the algo can find it, but I don't even pay extra for the license for it because I don't even use it, right? I do still have it on I do still have it on Sierra, right? It's still there on Sierra, but I don't even look at it anymore, because it's all programmed in now, right? So if you see a blue arrow on a up bar, it means there's a leftover buyer down here that never got filled. It does not mean he's going to step in right away, but it usually means that if you return to that area and then you get an aggressive buyer to support him, it's probably going to bounce on the first try, if not the second. See, this one did not hold. He was gone by the time they came back to it, right? It doesn't always work. It doesn't, just because he was there doesn't mean he will be there way later. But in this case, the reason it got me long was because I already had this blue arrow on the down bar here, oops, over here, which on the which is here, but it's on the down though, so it is actually this in the same area. It's in here. As they're going down, there is buyers. There are buyers absorbing that selling, and they're not like pulling their orders. Now the problem here, I think, is that after that we got a purple bar. Now normally that's okay if you're gonna wait for the signal to come back up, but that blue arrow means that buyers aren't giving up. The purple bar means that buyers gave up, right? So this guy who was buying here probably gave up here, and so that's probably why this first one didn't work, and why it took 2 tries is that they had to come back into his buy. So I bet if I put a line here and we go back there to that spot, I bet that buyer disappeared and came back. See, he got absorbed down here, right? And then came back in. See that? And then he was filled. Right there. He was filled. He was filled here. He's done. See how like there was a bunch here done, a bunch of work done, and then here it's just like whoop, right through it. That's the down, and then the up. The up, whoops, looks like it doesn't even get there. This now becomes support. This is now support. See that? So, and you can see it where the arrow is. See that? That's where that buyer. So the buyer was already absorbing here. The algo picked up on it, right? It's not time to buy yet. It's time to watch that level for a sign of aggression. We got it here, but they snuck underneath him one more time before they actually let it go. And that's the way the market is sometimes. Sometimes they get just under it a little bit, get everybody out. Like, look at that. Everybody got absorbed down there, and then boom. And then they can't get back to it, right? So if you want to be super conservative, the way to trade it is, in my opinion, is to wait for this blue bar, wait for this blue arrow, wait for them to get under it, and then wait for it to come back with a blue arrow, right? But it's got to have the aggressive signal too. The star, the green bar, something like that. There has to be an aggressive buyer that supports that. Otherwise, it's just absorption. And you don't know how long that absorption is going to take until the sellers are done, right? But if someone else is aggressively attacking the order book to the upside, I have a reason to think that they already absorbed sellers down there. That's going to work a lot, right? And so, but you can see that like just buying every star, like you're going to take some stops, right? You're going to take some stops. You can't just, I mean, you can, but I was not comfortable. And Simon doesn't condone this either. Just like buying this, and buying this. It does work out, but you need a lot of confidence to keep hammering at that. You know what I mean? So I personally needed a little bit of extra confidence building evidence that this star is probably better than this star. And so that's what the arrows are all about. Okay? And that's just an added signal that, like I said, I'm happy to share with anybody else who has the Trade and Perform algo on their desktop. So that was the little one. Then there's the big drop that Simon took here. We looked at that. Okay, so here's another one. So arrow on an up bar, identifying that this area is a support potential demand zone, I should say. It's really not necessarily support, but it's demand zone. So if we can find buyers down there in the future, they're probably going to take it higher. So you could buy that, or if this had a star or had a green inside, you could buy that. It's green on the outside, and that's another one of my signals that I used to use, but I don't use as much. It fires off a lot, and it basically just means that there are sellers at the low. See this? That's what it's looking at. And like, it is helpful in the right location, but I may turn it off because it also fires at like times when it doesn't really make sense, right? So it's not as good as some of the other ones. It was a very early attempt of mine to filter out trades that weren't working, but I don't think I have it optimized because it seems to show up too often, right? So I might just turn it off for now. Yeah, I did use it for a long time, and so like I would end up buying this one, and then like if this one had a star, I would miss it, you know, and just because I knew that there was a big trapped seller at the low, but the stars are not just a trapped seller. It's more than that. I can't speak to the stars. What's the like when you pull it up, if you have this on your desktop, when you pull it up, no, it's not that one. No, where is it? It's password protected. I'll show you. Is it? God, I forget what it's called. I mean, I could show you any of these really, but no matter what they are, they're password protected. So I can go to the alert and it's empty, right? So even if I wanted to tell you what Simon's doing, how Simon builds this, I couldn't. Like, even if you paid me, I couldn't do it. I don't know, right? Like, I don't know. I know it's in the order flow. I know he's looking at the footprint. I can see it, but I don't know the actual settings. And I don't need to know, as you can see. I mean, I had a fucking good day today. And I don't, even though I went red, you know, in the last hour, but you don't need to know how to build it to know how to use it, right? I can explain the ones that I built because I built them. I helped build the green and the orange one. These orange ones and the green ones were an idea that I shared with Simon that he added to our system, right? That was one that he actually said, you know what, I'm going to add this. I like it. So that one I know how to do because I've done it. I'm the one who built it. The rest of them, I can guess, but I can't. I couldn't tell you how to redo it. You know what I mean? And I wouldn't anyway because I respect him and everybody who pays for the room, and I don't want my room to go away because I appreciate having all the great traders that are in there. But honestly, I don't think they'd leave anyway because the camaraderie and the having everybody like working with the same system is really valuable. It really keeps everybody accountable. Okay, so we have pink bar star up here. So Simon probably took this. The footprint. Pink bar. Looks like this. Trapped a bunch of buyers up there. Jesus Christ. And then star. That's the star bar. Whatever that means. It means fucking sell the shit out of it. That's what it means. Especially when it's way up here. Above the channel like this. And it's after a pink bar. And I've added these backgrounds, this pink and purple background. And the way that works is if you can get there, it's an additional trade for a retrace. So what it says is once you've gotten one of these pink backgrounds, if you can get volume developed below it, and then you return to the area and get an aggressive seller, you can sell it again right there. So I took this, if I remember correctly, that is a sell because the wick interacts with this range, the bar that's associated with this background. That first test back in, as well as sometimes the second, that is rejected is a good sell, right? So I don't know it's a sell here, but once it's identified as a star here, I'm good to go. So I believe that was the one we took. Yep, and it took a long time. It came back. It did not signal, but I said that even though it didn't, if I would have had a orange bar right here, or a diamond or a star, I could have actually added back. But what I did is I sold here. I took some profits at 10 points. I let it come back on me, and I didn't do anything here. But I could have actually sold again, and then we got paid as it went down. Right? So we all did that together. Then you got a green bar with a star, and this was located at a support zone, if I remember correctly. Nope, I'm wrong. Never mind, I'm wrong. It was not. We needed this purple bar just a little bit higher. That's okay. So green bar star by itself will only work if it's quite bullish or balanced with a big range. Otherwise, you can just ignore those. But they are decent scalps as long as you have a range going for you. If you're, in other words, if you're moving from one side of the channel to the other like this, totally cool to buy pretty much every green bar with a star that shows up down here at the bottom of the channel. They will work a ton. And when I say work, I mean they'll get you back up to the other side of the channel. Because this is just balance, and a mean reversion strategy will work in balance, right? The thing you have to remember is that this zone here is going to continue to work until they establish some momentum. So what I should have done is shorted this, but I didn't. And the reason I didn't is that I got thrown off by these yellow arrows. So what I was watching, and I have to fix this, and I think I know how. What I was watching is I was watching these, and what I said on the stream was what I know about the pink bars, and it might be true about the arrows, but I don't think it is that if you get behind them, or sorry, if you get underneath them and then bounce, that it could be a sign that it's bullish. I don't think that's actually exactly how it works. That is how the pink one works, right? If you get up, it would be in the opposite, right? If you can get underneath it and come back to it, it's bearish, right? But I do not think you can use that same technique with the arrows. They're just a sign of like someone was getting their order filled and they didn't finish yet. So once you've gotten this arrow and you trade behind it and you get an aggressive seller right here, like that's all it's saying is that this star is probably better than a random star anywhere around here. Like it's the reason why this star works and this one doesn't, right? This one had the arrow on it, but it's not until after the arrow prints that you then have to look from this area. So what I should have done is looked and seen that we got another yellow arrow, marked off this area and said any aggressive seller that supports this area should be sold, which is right there. So that's how you sell that. Even if you don't have this, is the fact that we had a seller that was active here and didn't get their order filled. And so when they come back and they attack it again, you can sell it again. All right, so I should have taken that. I just didn't. All right, and then we get the blue arrow on a down bar. And if you remember what I said, same thing about this one back here. It's the same exact setup as, where was it? I thought it was right here. Oh, yeah, it is. It's the same as this, right? It's a blue on a down, which means that you probably are getting a little bit too far. They're getting overextended to the downside, and they're absorbing the sellers. So if the sellers quit after this, chances are we can get back to this zone just from mean reversion, right? Because all the selling that's happening after this is just like capitulation. It's like people giving up because we're getting under support, even though there's actually people absorbing the sell. So in the what you see in the footprint is all of this, right? Telling me, look, people are actually making, they're absorbing this, but we're going lower, right? So if we can get an aggressive buyer to support this area, there's a good chance that we're going to come back up and test this guy, right? And so what I did was when they came down, now this one, it's technically, it's valid. It's valid. I believe I should be buying that. That is a high volume candle coming back into the support, back into the range of this high volume candle, right? And we know that there was someone absorbing sellers here. So there's a relatively good chance, we might not get above it, but there's a good chance we're going to trade back into it. The problem with it, the reason why I hesitated, was I don't know if I have risk reward here. That's the problem, is that your stop has to go here, and your target is like tops here, you know? So it's like, do you really have risk reward? Now this one stopped out, if you recall. But then they gave us a re-entry with another arrow, and this one's way better. Because now, in addition to knowing that there's a buyer up here that was getting absorbed, or a seller that was getting absorbed by a buyer, we've now gone lower and found another absorbing buyer and an aggressive buyer, the diamond and the star. And now I have much better risk reward to come back up here, right? Because my stop goes underneath this. So I believe we took this one. I might have skipped it because of the risk reward. I know for sure I took this one because I'm supposed to take every single one of those. Now in this case, it got into that zone, and we got an aggressive seller. And pink bar followed by star is a pretty good scalp to the short side if you are having trouble getting to the top side of this channel, which we are. So what I said then is it does make sense once you see this rejection here to actually just take the whole trade out. But I was being a little greedy thinking that this might be the low because we actually traded under a previous low here. And I said that we were in this balance zone and that there was a reasonably good chance that we were going to come back up here and steal this liquidity. And so I held and I stopped on the runners, right? Stopped out on the runners. And we got yet again the exact same entry, star with the blue, except this time we also have a green arrow, meaning that we've actually got a green bar, which means we've actually got volume shifting higher. So all the volume was down here. Now on the up bar, the volume's up here. So that volume getting shifted at location, right, at the apex down here at a new low, or even at a higher low, is a relatively good chance that you're going to at least get a scalp out of this back to wherever resistance is. So I did take profits coming into here. And then once again, if you see pink bar, orange bar, I think the answer is it's just not bullish. So treat it as balance. And in balance, you're trying to get to the middle of the channel, which has already happened, so you exit. So I believe the right play there is either to reverse here or here if you think it's bearish, and it kind of looks bearish, or just take your profits and get out of the way, right? And wait for the next setup. So I got partial profits off, lost the runners, partial profits off, lost the runners, which, like I said, is probably not optimal here, but I was focused on getting a bigger run because I knew there was a chance that this liquidity was sitting up here. See how we did steal this liquidity, right? But we didn't get up here and steal this old one. All these red lines are pivots from the past. So this here creates this red line. And you can see that it wasn't broken because once it breaks, it disappears and draws a new one. So the fact that I knew there was liquidity up here, I thought we were probably going to head up there first. And I was wrong about that, but I traded with a conservative technique, taking profits at 10 points. And so my partial stops at 15 points didn't hurt as much, right? Because it was only 2 to 5 contracts rather than 8. And it was only 15 points of loss, and I already profited 10 points on a portion of it. So, okay, so we got these purple bars coming all the way down, And then I said purple bar star with the arrow. This would be a aggressive buy, and it's better if you have a reason to like this area in general. But that the way I'm trading now is I'm actually skipping these unless I think I can get risk reward back to the midpoint, because most of the time it's going to reject there, right? And instead, what I'm doing now is I'm marking off this zone. And again, there's nothing wrong with that. That's the way Simon teaches, and there's totally nothing wrong with it. Now I'm marking off this zone as soon as that arrow shows up, and I'm saying any bounce from there that gets an aggressive signal should be bought. So really, I should have bought this one. In reality, that's what I should have done, because the aggressive buyer showed up right away. But even if you didn't get that one, well, then this is a sell, pink bar star at the midpoint if you're bearish. But then we get another blue one, and I don't really know what I said I would review this. I don't really know what to do about this blue arrow way up here that gets traded underneath by only purple bars. I'm not sure what to do about that. It doesn't look bullish to me, is all I'm going to say. It doesn't look bullish, and I don't know what to do about it because we've traded under it now. But look, we got back into this support zone. They found a buyer. I'm pretty sure that's good enough for an entry. Oh, there's no star on it. No entry. That's right. Hefe asked about this. Why isn't this an entry? It's because there's no star and there's no green bar in there. In Simon's world, this is not an entry. So for me, it's not an entry, right? If it would have had a star, if it would have been green like this, I would have had to take it, and I would have gotten a full stop most likely. I don't think it made it 10 points, right? But I think the problem, the reason why we're not getting any aggressive buyers here, is because we trapped this see this guy up here was absorbing sellers really high. See that? He's absorbing sellers way too high up here. And so when we trade under him, I believe that becomes like a trap zone, I think. And I believe what that means is you can probably sell this. Or maybe this? No, that stops too. I'm not sure how to deal with this. Like I said, I just don't know what it means. It might just mean ignore it because it's not in the right spot. And instead just wait for this, because this is the primary entry. The star that sets up off of the demand zone. Right? That's the primary entry. In fact, it works with the purple bar too, does it not? This. Even without the arrows. This purple bar, oh no, for this purple bar you need to get out of the area first, develop volume up, and come back down. So it only works with the arrows. You have to come back to it again. So the next time it trades in there, because it's got a purple bar, it should bounce. Yep, right there. That bounce right there should be anticipated. It just rolls over after that. But it did act as support. They just got stuck, right? But what I'm curious about is how do I deal with this? This guy who absorbed all these buyers, they shifted volume higher and they got under him. I would assume that's bearish. So maybe rather than just sell, I mean, you could just sell it, I guess, when it breaks down. That seems kind of dangerous. I don't think it's okay to just treat it as a supply zone because you have poor risk reward here. If it was way out of position, like up here, it's probably okay. But in this case, I wonder if what it means is that even when you get over this, what happens when we get over it? Yeah. This. Nope. No. Okay, so you really do need to get over it. I'm surprised that doesn't work. It really is different than the pink ones. I might just have to ignore those. I'm really not sure what to do about this. What I'd think is if you get over it, then shouldn't it be a new support zone? Oh, it is. It is. Huh. No, it just doesn't work for very much. But it is. They try. They try. Okay. So you just need to, just like the other ones, you need to trade above it. Interesting. So if it's out of position, you need to extend above it, pull back into it, and then get an aggressive buyer to support that support area. And then you'll get a scalp. But since it's not at real support, it's just scalps, you know? It's just scalps. That's interesting. I wonder if I can find a yellow one that does the same thing. So here's a yellow one. It appears to be at resistance, but then they trade above it, right? Here, they trade above it. And so the way it's been working is when you have an aggressive signal that comes back into it to the short side, it should be a short. No signal, no star, no orange bar, no diamond. Ah, there we go. Another arrow that's slightly higher than I'd like it. Oh no, higher is good for the yellow. So is that just, did you just sell it? Hmm. Nope, I think you sell that. Oh, I did. We did sell that, didn't we? I think we sold that. I believe that's a sell. Yeah. Okay. So when they're in position, that's right. I'm mixing it up. So when the yellow arrows are way up high at resistance and the blue arrows are way down at support, they act as future support and resistance. Pretty simple. The problem is when you encroach into the middle, you don't have any risk reward anymore on shorts out of here. So this short won't necessarily work right away. Okay. So it doesn't mean it's going to stop out, right? Like if you have to put your stop pretty high and here's one of those taps again too. So see that tap of that zone gets traded behind. So I got to be careful with that. What I really want is a wick inside of that range with the arrow. I want a wick inside of there. And then I want a rejection. The problem with this is I'm going right into support, so you have to be really bearish to take a short way down here. But it does look like it's valid most of the time for at least a scalp. Obviously here it went a lot further than a scalp, but I ended up getting out here, right? But we did take this short together. I think it was that one. Should have been this one. But I could have technically re-entered here. Oh, I remember I said that I wouldn't put my stop to break even because of MLC, and they popped it up on MLC and then rejected. So I technically could have added to it when it didn't go any higher here. Let me just see what this looks like on the footprint. Let's take a close look at this. Here's the entry. Wait, where's the support zone? Okay, resistance zone developed here, right? Someone's not done filling their order. They get behind them, finishing the order, and then they proceed to sell it with like no volume. Buyers just give up. There's still someone who wasn't filled here, supposedly, and they come back up, and right here, he's still sitting there like an iceberg. And so you can chase it, not chase it, but short it. And then there's MOC ripping everybody up who put their stop too low. And then there's the ad. That's the star right there. Cool. Okay, so we want to find a yellow arrow that is too low or a blue arrow that is too high. That's what we want to see how to deal with. So here's a yellow arrow that's awfully low. Do we just ignore it? Oh, we're actually dealing with it right now. I'm gonna have to scroll back to some random day and do it. Because that's right fucking now. So the question is, how bearish does it need to be to short out of that supply zone? I'm not sure. And the other problem is when you have a blue or purple, background right below it, that means that developing volume up above that is potentially bullish. And I'm just still not sure which one supersedes, but I think that is actually the stronger signal. So pink background, they try to get it above, but they can't get the yellow line above it on a bull bar, and it rolls. See that? That's how it's supposed to work. Yeah, pink background. They get it back in. They can't get the yellow line above this, and it rolls. So even with just that, purple background, they can't get it behind it. It runs. They test it. They can't get the yellow behind it on a bare bar. It bounces. It might just be a scalp though. Now they've gotten it below it, right? Now it's clearly bearish. So now we can look for bear setups. Probably here. I bet you this is a bear. I bet you can sell that if you get an aggressive signal. Yeah, I mean even this one seems awfully low, but I wonder if that one's even okay. Since now we've basically like stacked up bear signals. I bet it's just like super bearish, which is funny because that's exactly what I thought would happen, and we went right through my target. I just wasn't willing to hold it through the settlement. All right, let me swing back and see if I can find some poorly positioned arrows, and we'll see if this is. Let's just go back to like some other day, and we'll see if this is consistent, at least recently. I don't, is this? Where are these arrows coming from? My OCD is making me. I don't. There we go. Okay, so blue bars. This is still today. Blue bars that are too high, yellow bars that are too low. Yeah, but see, these do create. Okay, so on the way. Oh, that's a down bar. So that we know that's resistance. And the idea is when you get one coming up, you can probably get back to it. But you can see that the risk reward there is not very good. Right? Risk rewards there's not very good. So that is the right thinking. Okay, that's still pretty well positioned. See how this becomes resistance. Damn, that's cool. Jesus. All right, this one is on the up bar, so that's our target. Once they show some aggression, we get short there. We target right there, and we're out. Fuck yeah, that's cool, man. That's fucking cool. Am I wrong? That's pretty neat. Okay. That blue bar is really low. This would be support zone. It looks like you can take the stars that come right after the arrows. And if you miss it, you might be able to take the diamonds after it. Okay. Oh, hold on. I'm getting a phone call. Let me just make sure this isn't important. Just give me 1 second. Oblivious to the outside world. Oh, okay. It's just my bros checking up. Okay. Okay. So, let's see. Pink. So pink starts. We get volume below it really here. And so now is the next retrace into that area shortable. When it's this far away, that would be this. Not much. So it may be that the further away we go, the less that setup works. And that makes sense to me. That makes perfect sense to me. And I bet we got some arrows down here. Let's see. Yep. So we got a blue arrow there. Did we get a yellow arrow? Oh, we just got another pink bar. I see. We got another pink background. So perhaps we need it. Ah, and see, this didn't break this. There's the yellow bar. So we would need to get underneath this to be bearish. Wow, okay. Oh, that's a little tricky. So if you get the pink background and you can't break underneath it, that's how trends develop. Is like everybody basically who absorbed there is totally fucked. Oh. Sorry guys. Just wanna attend to my family here. Okay. So yeah, in trend situations, what we're gonna see. See, is it trending back here too? Here, let's see. Where does this all start? Yeah, right here. So let's go bar by bar here. So you had the very first purple there, very first purple here. And then you had another one way up here. So the way to think about it is we can only be bullish if we get above a purple, come back to a purple, and get a bounce, right? So this one would technically qualify, and it fails. But it's pretty bearish. Oh, it failed because it ran into this one. I bet. Oh, it didn't reach that one. Okay, failed for some other reason. Whatever. Nothing can work all the time. So that one straight up fails. It got one white bar above it. That and when I've seen this happen before, where it's like pink, white, pullback. That might be the problem. Is the pink bars are showing some weakness. So let's see. What about when we get above this one or this one? And do all of them count or what? So we can't get up above it there. So if we're bearish, you won't be able to get this yellow line up here on the bullish bar. Okay, pink. I'm expecting a pullback. White, pullback. Okay, so this is your last chance to short, but what I really want now is a buy down here because I have another purple background that I can work off of. And it just doesn't get there. So that's how the reversals look tricky. So if we ignore this one, we could just say that it didn't set up. Then we have this one gets over it, gets back to it, taps off of it twice, and just goes. Oh, okay, good. Here, right there. So I would skip these because I'm just not aggressive enough. I know sometimes they just roll over. And instead, I believe that one's good to go. Yep. Cool. All right. What about this one? It failed here. I'm not sure why. We then try to get over it with a pink bar. Can't get the POC to stay above it until here. And it rolls over. So this one repeatedly failed. Here on a green bar. Maybe. Usually green bars are good to go. But I wonder if you need a different set of rules for green bars. Then I wonder if you... I'll have to work out what the difference is between this one that didn't work and this one that clearly did. They both were just single purples. This one was a purple bar under a purple... Oh, could that be what it is? That it has to be a purple bar? That would be strange, but possible. They do show up a lot on purple bars. I don't think so, though. This one's not a purple bar, and it clearly worked. It's not that. Pretty sure I would have noticed that. Oh, is the purple bar the one that's not working? Oh, the purple bar is the one that's not working. Okay, hold on. Let me see. I swear I've seen purples work before. So, I know I have seen purples that work before, like this one. This one worked. Got above it, came back into it, bouncy. So it's not that. I don't know. Like I said, you're not going to filter out every single stop. Sometimes it's just not going to work. So, okay, let me keep looking here. This one's well positioned. Does this fire? So, okay. Here's this. Means that we're getting a little bit overextended. It's not time to buy yet. Right? You can scalp this, but you really only think you're going to get here at that point. You've got a first purple background bar up here. That is your resistance that you'd need to get over for this to really extend. It trades under it, comes back to it, and gives you a sell signal, right? So that's probably where you should let go of this if you bought it. But then it comes back into here and gives you this. Oh, and it gives you another one of these and another one of these. So it's just got a lot of signals here. But then it does come back up here and gets the reliable one. Right? Tries to bounce off this one. So when you get all these like tons and tons of signals, in the same area, and that's exactly where I took my stop. That might be where things get a little tricky because you're just getting so many signals firing that you don't really know which one's going to work next. And you could take the one that doesn't work and then miss the one that does. Whereas when you got bigger ranges, it's probably, more likely that your scalps will work. But here, technically, this is also a location. And so you can see that these just start to get overlapping. And so eventually, best case scenario is you buy this, sell this. Like, what's the point? Right? So even though you could technically say that this green bar did something, it went to the next signal where you expected there to be resistance, there wasn't anywhere to go. Right? And it's not until you get price above this, which didn't happen here, or you put in another capitulation. And so now you finally trade above a purple. See, this one we couldn't get above. This one you could. Is this the one that fails? Yeah. So, okay. So it looks like when it gets really bearish, it may not work on the first try. And so you could just wait until one works. Right? Just wait. And then once you see that bounce, which happens, it's got to get, over one. Right there. Come back. And bounce. So once you see this, clearly it's not bearish anymore. I mean, that's kind of obvious in this situation. But now pullbacks into that zone. Oh, it just doesn't come back. Pullbacks into that zone should be bought. I don't think it comes back. Okay. So not that easy. Like I said, I'd like to find some of these out of position ones because that would help me know which ones I want to ignore. Blue bars on the top, yellow bars on the bottom is what I want. I guess they don't happen very often, thankfully. But I really don't know what to do with them. See, this one's okay. That's a good pivot. Alright, what about this one? Trend up. These are our locations. We know we're potentially getting capitulation coming here. We get a sign that they're trying to be aggressive. Our target would be in this range. That target's not far enough away, but it does get hit. It's not very good risk reward. They bounce right off of it, and they keep going. We get another one. Right? This one, we have this, this, and this. Lots of locations. They trade, whoops, just a little bit further. Capitulation. This one goes right through that. What we want is a retrace that we can short. Now, right there. If this had a star or a green bar or an orange bar, that would be really good. Oh, does this one count? We got volume above. Oh no, we would need volume below. I'm thinking about this backwards. We need volume below this. It just doesn't set up. Wait, no. It doesn't set up. It would have to give us a sell signal right here. Right here, does it set up? Nope, it's way too late. So yeah, if you wait too long, the conditions change and the order book obviously changes. So when it's super trendy, I need to not fight the trend with this because that's not going to work. But when it's balanced, it clearly does work really well. All right, so what happens when you get blue right on top of yellow? Oh yeah, blue back here too. So let's back up just a little bit. I don't think I did this one yet. Purple bar, right? So to get bullish, we need volume above this, doesn't happen. Volume above this doesn't happen until here. Now we need a bounce with a signal that closes above this. So it needs to close up here. Right there, that might be good enough. This might be good enough. Right there, that's what we want, right there. That looks like it. That one works. Okay, so how do we deal with the fact that we got yellow arrows down here? This is saying that this is potentially, see, this is out of position. It's not at resistance. And it's a sign that someone's absorbing buy orders. Do we trap them? Is that the solution? We trap them. We trap them. Okay, so they're out of position. I wonder if out of position arrows followed by an aggressive sign might actually be a buy. Is it that simple? So it'd be yellow at the bottom, blue at the top, followed by a star. This one's not. Yellow at the bottom, blue at the top, followed by a star. In the other direction. Blue at the top, followed by a star in the opposite direction, short. Okay. Looks good. It's got to be the top of the top half of the channel. This is the bottom half of the channel. We're not going to worry about that. No yellow bars down there. No yellow bars at the bottom of the channel. No blue bars at the top of the channel. This is in the right place. This is in the right place. Interesting that when it's balanced, they actually tend to work for just entries. It's kind of cool. Not the intention, but see, but when it gets choppy, it's not good enough. Bottom of the bar. Here we go. Blue at the top of the channel. Blue at the top of the channel. Orange bar, short. Okay. That's neat. Because it's easy. Arrows, arrows, arrows. This one is in the right place, but it's followed by a star and it's bearish. Wow. Yellow just works. Blue at the bottom, followed by stars, up. Blue at the bottom with the stars, up. Blue at the bottom. Blue at the oh my god, this is working over and over again. Blue at the top of the channel, star. Why can't I point to that? Blue at the top. What is going on here? Blue at the top of the channel. I don't know why I can't point to this. It's like bouncing all over the place for some reason. What is going on? Is this like the end of the... I don't know why the... Why is it bouncing around? For some reason, I can't get this to point in the right... It's like it's got a magnet that it won't let it... I don't know what's going on there. This star is after this blue arrow. They try to go lower. They might stop it out by a tick, and then it goes lower. I'll call that a win. Yellow at the top, blue at the bottom. Yellow at the top, yellow at the top. Yellow at the top. Blue at the bottom. Okay. Yellow at the middle, followed by a diamond. Gone. Whoops. So maybe it just has to be at the middle. Right? Blue at the top. Yellow, star, lower. Blue at the top, no yellow star. Blue at the top, yellow star, scalp down. Okay. I mean, it's not a huge move, but it's working, like a lot. So when it gets bullish like this, you definitely can't just sell these, right? But when they trap back in, it does. I know it does often work. Trap. See, so it's like bullish, 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 bullish. Yellow on a capitulation move. This guy can potentially get trapped. And he does. You get a sell here, comes back down, right there. Scalp down. Here it is again. Yellow, after a lot of bull, right, on a bull bar. You don't have to short the very next bar. It's not a short signal, right? But particularly if you trade under it and you come back up and you get a sell signal inside here, but really even this way up here, if it's high enough and you can take some profit here, especially if you get a trap back in, sell. That's in the middle, and there's no star after it. Blue at the bottom on a bull. So this is exactly opposite on the bear. So this is bear bar with a bull. right? Suggests that there's capitulation coming. You don't have to buy the next bar, but if we can get over it and then come back to it, it's going to bounce. That one took 2 tries. You might have gotten 10 points here. It's obviously not 100%. But the other thing about this is once you get the capitulation, if your target is this bar, you can scalp these. That's what I've been doing. Blue at the top. Blue at the top of the channel. Wait for the sell signal. It's just the red outline. It's not a high odd sell signal, but the location's right. Ah, fuck. What do? I don't want a 4-hour chart, people. Sorry. While we wait for that to go, does anyone have any questions? Are you following along with what I'm looking at? Like, I'm just like manually backtesting this. New idea. Let's pull up like a random day, okay? Someone want to throw out a date? Let's pull out a random day. We're gonna do data limiting. We're gonna load like. Let's load like. It'll take forever. Let's load 21 days. Let's see if that works. If I load like 21 days, can I back out? And then the other thing I can do, you guys, is I can actually look at a higher or lower time frame and see if the edge still exists. And if it does, it means that it actually might be worth coding the entries in, because it means that it would be you could like see if there's an entry on like the 16 tick and then see if there's an entry on the 24 tick or whatever. So now we're going to go to the 80 tick and we're going to back this up a lot and see if we still have the signals. Oh, are they not printing? How do I change the actual date? Date range from let's see, let's do 8:30. Why wouldn't that be right? No. So number of days to load. So what it's looking at is this. And it's loading 21 days. But my signal is not enough bars. Does this fix it? There we go. Now they're there. All right, now the problem is we don't have all the rest of the signals. Do we have stars and red bars and green bars? I'd have to do that for all of them. There's got to be a way just to like load up a certain date. Hold on. There's got to be a way. Okay. Use date range. And then make this. Oh, I can't change that. Okay, let's just do that. This is going to take a minute, guys. I'll be right back. I'm just going to run to the bathroom now because this is going to take a second. I'll be right back, okay? Whoops, sorry guys, I had my microphone off. Okay, so I figured it out. We loaded up September data, right? I want to just take a random sample of a time when this contract was still running, but where I don't really know what's going to happen, and the conditions in the market were different. Um, so let's see. Um, yeah. So what we're gonna do is we're gonna look like step by step, and we're gonna mark off what I would have done with just these new ideas, bar by bar, and just see if we can find some trades that actually worked, or see if things have changed since then, right? So I'm gonna start at the open, although the open probably I should probably go to 9 o'clock actually, because the first 30 minutes is kind of like right? And I'm not even gonna think about location. I'm not gonna think about like anything else. I'm just gonna say, do we have these signals continuing to work? So here we'd have to get under that to be bearish, right? We have some over here, but we're just gonna use the last one. I don't know if it's the highest one or the last one. Now we have a bull bar with a yellow arrow. That tells us that that can be our target if we want to scalp against the trend, and that it's possible that we might get some kind of capitulation here. If we get under it, it might also become resistance. So let's see. This one just immediately falls down. And then does it act as resistance? So this one, they try to hold it as resistance. You get a scalp out of it. But you got another blue bar. See that? So this blue bar, all by itself, on the up bar, says that this area has a buyer that didn't get his order filled, more or less. And what it means is if you trap underneath him, or if you get higher and come back in, also often it'll be a good scalp to the long side. The problem is we've got this here, and I want to know if that acts as resistance, because it was acting as resistance today. And the answer is yes. It acts as resistance. Right? So if you didn't short this because it's too aggressive, I'm pretty sure you can short that. Your target should be down here. And if you wanted to be a buyer, you'd buy this because of this blue bar. You wouldn't buy the arrow itself, per se, I don't think. But the thing that I was getting confused today was that if you pass underneath these, oops, like this, it does not mean that it has to go lower. That's where I fucked up in the opposite direction, but that's where I fucked up today, is that as long as you've gotten this blue arrow, that buyer here that gets filled and then they come back with more aggression, that supersedes this. So you can come back up here and get this scalp, but that this area can still act as resistance on another pullback. So that's a beautiful short. Oh, it also got another arrow, right? So, and it's on a down. So now this actually can also be resistance in the future, and this should now be resistance too. Oh yeah, now back. Oh, okay, so we paired to another purple one. So we have to get over that to be bullish. We have to get over this to be bullish. Get over it, back test it, retest it, and then bounce. Okay, there's our potential capitulation. It's not a buy yet. It's our target for our scalp back mean reversion, right? We get the first sign of aggression. Do we have 1-to-1 to get back into here? We probably do. So it might be worth trying. I don't know if it's going to work. It gets back into it and immediately rejects. Okay, so just buying into that might not be a great idea, especially when there's purple behind it. I think that in particular is causing problems, because this is actually resistance as well, right? So instead, I might not use it that way, and I might wait till we get above it. But as you can see, we put another purple bar in, so now can't be bullish until it gets above this. This is obviously a pretty bearish day. I just picked it randomly. Okay, so this one stopped out. There's no blue arrow here, so I'm not buying it yet. But yeah, and there's no blue arrow here, I guess is what matters. Okay, this acts as resistance again. This acts as support. See that? So we got above this purple bar with a point of control above it. 1 white bar is all it took. Came back down, bounced. Let's see, does this hold? Does this hold? No. Okay, so it runs into this resistance, and once again, the arrows supersede this big bounce, because this big bounce apparently needs some momentum to work. In other words, the supply zone being up here needs to be depleted before you can expect this bounce to go anywhere. So it did bounce. It just only went to the supply zone. So when they're this close together, you just have to go with the trend, right? When you've got purple bars and blue arrows or yellow arrows, or pink bars and blue and yellow arrows, you have to wait until you get behind them before you fight the trend. Okay? Interesting. And once again, the very bottom purple bar getting beat by just one bull bar was not enough to overcome all this resistance. And that does kind of make sense. Okay, so then it's really bearish. Those scalps back to midpoint are only going to make it to midpoint. Okay, can't get bullish unless you get over this. You don't really get a breakout signal, but I wouldn't take it anyway. Can't get bullish unless you get over this. If you're short, you just stay short. Okay, capitulation possible. We can't get a bullish bar with point of control above it. It gets point of control above it, it immediately closes bearish, right? Now we get the trap back in with the arrow. That's our first. Oh, fuck. Sorry, buddy. Forgot to fix it. Thanks. Appreciate it. I did that the other day. Okay. It's okay. You haven't missed anything. This is all. So I pulled up a random day, and it's been all bearish. So we haven't really had anything trigger. The one that did trigger was this, and it just didn't go anywhere because it ran into resistance. So here, the blue arrow on a bearish bar signals that we may have capitulation coming, right? Someone's absorbing sell orders. So if you can trade under them and find a buyer, which would be another blue arrow. Yeah, thank you. I appreciate it. I wouldn't have caught it. I wasn't looking at it. I appreciate it. Now, what I'm wondering is on this super bearish day, can I just buy this and target? I guess your target's this. Because really, it's not bullish until you get over that. Cool. Oh, good. I'm glad this has been helpful. I was going to say, some people think backtesting is boring, but I think it's fascinating. Can't get over that. Yeah. So this was working today. We took a trade. It took 2 tries, but we took a trade just like this, and it worked beautifully to the upside. But when it looks like when you have a purple background bar in that same general area, that purple background bar is going to act as resistance until you get above it, right? It's like it's resistance till proven otherwise, as long as it's bearish. We're so far below average, it's just not a balanced day. It's a bearish day. So, you knew not to try to buy until here. That's good. But this buy, I would have thought that it would go somewhere, and it just doesn't get over this. So, now we are looking at a day that was super bearish. Now, they do it again. They get under a blue bar, and they trap back in with another blue bar. But once again, they've put in, here, I'm going to see many lines. Once again, they've put in another purple one. So the conservative way to think about this is it's not bullish until we develop volume up here. Right there. Now, buying dips should work as long as you don't just want to buy it when it dips, but if they dip and act as support, now it should work. This should be the low. Oh, they just fucking V off of it? Oh, that's nice. Okay. Well, okay, here we go. Do they? Let me just see. Right there. They dip into it. This should be the low. Please be the low. Ah, they do it again. This one. It got you a scalp. They came back again. That should be the low. Ah! Fuck yeah, that's cool. That's fucking great, actually. That's, that's crazy cool. So one more time. Quicker. Super bearish day. Big rotation down. No buying. Until they can get a bullish bar with point of control on the bar above the first bar that turns purple in the background. We don't have to worry about these. This is just continuation and more evidence that it's bearish, right? So mark off this, not bullish until it gets up above that. Not bullish until it gets above that. As you can see here, this one, a pink bar is not good enough. A pink bar will not be good enough. Hold on, there's just, no. Okay, never mind. So here, put in this. You got above it right there with a point of control that's not a pink bar. They try to bounce. This one fails. It runs into this resistance right there. So that one fails. It's not 100%, right? But you knew not to buy till here. That's fine. What the real low looks like is you do that with the blue arrows. So blue arrow by itself, right, still can't buy unless you get a POC on a bull bar above that. It doesn't happen. You just skip it, or you aggressively scalp this and take profits in that range. Or you just short that, right? But it's really fucking dangerous. Because once you start seeing these blue arrows, you know the capitulation's probably coming pretty soon, but it's too soon to buy with leverage, right? Now you get another purple bar, and you can see that much quicker now. Just like this, you got purple bar, immediately get blue arrow. Purple bar, immediately get blue arrow. This blue arrow is on a up bar. See that? This blue arrow is on an up bar. Unlike this one. So capitulation, because it's on the down bar, is coming. You now have an order, a guy absorbing sell orders. Is what that buy or not only did he buy a big order, right? And you can see it. See all the red? That's really all it is, right? It's not rocket science. It's just easier to see an arrow than it is to freaking stare at the delta footprint all day. But yeah, so you got this guy. We closed the Renko bar bullish, and he was absorbing sell orders, right? It's not a buy yet. But if they trap underneath him and print another blue arrow, it's usually a buy. And for sure, if they get above him with some, and they put volume above him like that, it's likely, it's not necessarily the low is in, but the next rotation's probably higher. And then what's cool is even if you miss this, you can mark off this area that had that blue arrow after the capitulation. So blue arrow with the down bar, blue arrow with an up bar, blue arrow with an up bar, you got above it. That's what you need. Blue arrow and up bar, you got price and volume to get above it. Anytime they return to that, these are going to be wicked good scalps. Wicked good scalps. And if you hold runners, you might get a home run. And it's going to be the exact same thing on the other side. Right? So, okay, so now let's see here. If you, let's say you missed that. Let's say you missed this one. You get this big move off the low. Should we still be bearish? Well, you can be bearish if they get under that with volume, like this, and then they come back into it and reject. Right there. So that should be a sell. This one takes 2 tries. Your stop initially goes above this. It gets taken out, and then they immediately trigger again. The reason it takes 2 is because they put in another pink bar here, pink background bar. So really, you need, if you get a pink bar and then extended below, and then on the way back up they print another pink bar, you should probably wait for the trap because it's probably coming, right? They're probably going to trap it. But one or another, even if you have to take a stop first, that's okay. This is a short scalp, and it worked today, and it definitely works there, right? So if you don't want to be bottom fishing, and you're like, man, I missed this whole move, like just wait for this move, wait for the pink bar, wait for them to trade below it, and then wait for them to aggressively reject that area, and boom, right? Now that area should continue, you'd think, should continue to be resistance. We haven't had any yellow arrows. No blue arrow. Okay, purple bar. Again, let's say you missed the low. Purple bar. Purple background, I should say. Note here, the only bar that's bullish that got the yellow line, the POC line, above the bar that has the purple background is pink. Meaning the only reason the price went up there is because sellers gave up a little bit. There weren't really any aggressive buyers there. It's not a white bar. It's not a green bar. So it's something, but it's not definite, right? But thankfully, you put in another purple bar here, purple background bar here. Put another, wrong tool. Put another purple background bar here. Okay, not a buy until you get a buyer that's not pink up here. This guy was pink, so that doesn't count. That one. That is your sign to stop being bearish. And now you can buy on a pullback if they give it to you. I don't know if they will. At the low, they probably won't. Yeah, so they probably won't give you the pullback. They won't give you the conservative entry. The only other trade I see possibly here is seeing that this yellow arrow that's on the top of the channel, well, middle of the channel, which should be bearish, right? Once they print yellow arrow and they immediately come back at it. This was 2 bars later, but with a star, and you already knew that you were looking for bulls here, that might be an aggressive entry. But otherwise, you'd have to just recognize that they're aggressively holding this low and see that this didn't work, because normally this should be resistance and they broke through it. So I guess you could buy this. Oh, they got another. Here we go. This is it. Oh, no, it's still not at the bottom, though. It's still not the right spot. Yeah, so in general, it looks like when you see these arrows get beat right away, it's probably a decent spot. If you're going to buy a breakout, that's probably it. Arrow followed by green bar, arrow followed by star right after it. Arrow followed by green bar, probably safe. Arrow followed by diamond, right? Those are all order flow signals that buyers just are not giving up. And if it's bullish, if it's bullish, it should work. Interesting. Now notice here you've got pink bars in the background, so you can't just short those. It's only if you got a bear bar below it, which you don't there. You clearly don't there. You don't here. You can't get below those. It's bullish. Okay. Now you got that one. You got a arrow down, right? There's a seller there who did not get filled. That's what it's saying right here. Seller did not get filled. If you come back into him and they reject out of it, why can't I grab that? If they reject out of that, it should go lower now. What is going on? There we go. It should go lower because this rejected. You'd think that'd be a short. But we might be running the exact same problem we saw on the way down, that there's a pink bar. There's a pink background bar that has not gotten the very highest pink background bar. There's no bearish bars below it. You can't sell it. Wow. Okay. I'm gonna have to write this down because this is actually working a lot, but it's a little complex. Let's write this down. New note. Okay. Pink, purple backgrounds, yellow, blue arrows. Let me say, keep it consistent. Blue, yellow arrows. Okay. No. Okay. I don't know what I'm going to call it yet. So, like, assumption number one, the way you do this is you write them down as, like, concepts first, and then the last step is what's the process of what the trade looks like, right? So, like, assumption, you could call it, or hypothesis, right, is that in a bullish market, we'll just say, the market will continue to go higher unless sellers can produce a bearish bar with the POC, meaning it closes bearish, right? With the POC below the low of the most recent pink background bar. We'll just call it that. I'd call it PBB, but then purple background bar is the same thing. So we'll just call it pink background bar for now. I don't know what to call it yet. I called it something else in the actual studies, but whatever. This will make sense. I don't want to come up with whole new terms and get totally confused. So in a bullish market, the market will continue to go higher, right? Unless sellers can produce a bearish bar that gets underneath the low of the most recent it's not the most recent pink bar, it's the most recent set of pink bars, right? Or single pink background bar if let's see, I can leave it like that. The most recent set of consecutive pink background bars. Yeah. So, as an example, it's this bar here. It's the most recent set, the lowest. I guess what matters is the lowest. The low of the lowest bar within the most recent set of consecutive pink background bars, right? So the low is this. It needs a yellow line below it on a bearish bar. So even this does not qualify. Wait, yes it does. It prints a pink bar up here. So now that it's got a new pink background bar, this is the most recent set of pink background bars. Sell it immediately. Boom! Oh, fuck! That's fucking great. Okay. I gotta like pour some scotch here, man. This is exciting shit. Okay. So now I want to picture that. Oh, and I said it must be the bar, the signal bar that prints a POC below the set of purple background bars, must close bearish and cannot be purple. Which is I forget what it's called. Whatever, purple. Doesn't matter. So then we're going to take a picture. And it is this one. So it's here first, here second. It's a messy picture, but I'll get it. Okay. Now the opposite of that we saw back here. and then we'll add the arrows in a minute. But this is the and then like I said, there's also a trade. So on the arrows, I'm sorry, on the did I say purple? This should be pink. In a bullish market, it's pink. Pink. Okay. In a bearish market, trading primarily, completely below the channel. That's the trading complete above the channel, right? The market will continue to go lower unless buyers can produce a bullish bar with the POC above the high of the highest bar within the most recent set of consecutive purple background bars. The signal bar that prints a POC above the purple background bars must close bullish and cannot be pink. Okay. Hopefully that makes sense. Now, it makes sense to me. It's all that matters. So now I'll mark it off. So it's this. Or is it? Oh, it's really close. It's almost this one. Real close. But this one, I said, did not produce one. I guess I don't really need that. That just makes it confusing. So it's technically this one. The first bar that closes with a POC above it that's not pink. That's the first opportunity to expect the market to turn. It's not necessarily a trade entry unless you're really aggressive, right? But it's the opportunity for the trade to turn. Okay, now on top of that, we're going to say trade entry with the purple bar, or bullish trade entries off the purple bars, purple background bar zones, we'll say. Okay, so what this is going to say is that primary most conservative buy opportunity occurs after. Here, let's name this. So once this occurs, we said that was a signal bar, right? The bullish signal bar. And we're going to call this the bearish signal bar. Okay. Primary most conservative buy opportunity occurs after most conservative buy opportunity occurs after the market prints the bullish signal bar and returns to rebid, which means retest to the downside, the range of the what did I call it? The set of pink background, purple, purple background bars, right? The primary most conservative buy opportunity occurs after the market prints the bullish signal bar, then returns to rebid the trigger to enter bullish is a defense, an aggressive defense, we're going to call it, of purple background bars range. And then in parentheses, I'm going to say star. We'll say volume shift or speed drop, right? Volume shift, which is a green bar, or speed drop, which is a diamond. Possibly the blue diamonds too, but we'll get there. So then let's find that quick. It's got to come back to it. I got to actually see it. Okay, so it's right. This one did not get up. It was only a pink bar that closed above it. See that? And it came back. Maybe the pink bars do count in some situations. That's interesting. Well, they've already done it over there. I think. See, this same area was already the first purple bar of that. So these are all entries. But this one is technically an entry on this one too. So let's do I ought to be able to actually see it, but signal bar, entry bar, entry bar. All right, put that there. What the hell? No! What'd I do? No, not drop files. Jesus Christ. Okay. I can't see what I'm doing down here. Okay, fuck this up. Hold on. What is going on here? Okay, so all of this needs to be taken out. The below channel market will continue to go lower. Okay, so I started here. Sorry about that. All right, so this is copy. Paste. Okay, and then the opposite of that. Primary most conservative sell opportunity. Occurs after the market prints the bearish signal bar and then returns to re-offer. The range set of pink trigger to entry bearish is an aggressive defense of the pink background bars range. So this is orange. Okay, let's find that. I highly recommend you guys write these down when you build them, if you build them. Because oh my god, it's so frustrating when you can't remember how to do it. Definitely been there. Okay, so we want one that prints, comes back, and tags it. Like that. Too big. There we go. Okay. All right. Now, whoops, what do I do? Now, That's the purple and pink, but in a nutshell. And that alone is pretty fucking cool. But we also have the arrows. There's a couple ways to use the arrows. Okay, the easiest setup with the arrows. We can call it the momentum scalp, basically. Arrow. Let's see. Blue arrow. No, we're going to do bullish first. So, trapped yellow arrow momentum scalp. Okay. So for this guy, I didn't do the idea of what the arrows were, but we'll get to that. I got this is fresh in my mind now. So what we're looking for here, very simply, is in a bullish market, yellow arrows that print on bearish bars at or below the midpoint of the channel. Yeah, yep, and can be trapped by aggressive buyers, stars, green bars, diamonds. The most consistent entry occurs on the very next bar that beats the yellow arrow bar, which means goes in the opposite direction, takes over the PLC. I've already talked about that. Otherwise, the range must be highlighted, and a return to that range, a rebid that range with an aggressive defense of it is good for a scalp. Okay, let me find that real quick. Okay, so now we're looking for yellow bars. They're at the bottom. Is this current? Did I jump all the way to the... Oh, I just only, I didn't load that many days. That's right. So, yellow bars at the bottom of the channel. Probably when it's bullish. This one's in the middle. Yellow bar, bottom of the channel when it's bullish. Not bullish, not bullish. Bullish. Blue bars, blue bars, blue bars. It's going to be a yellow bar on a bear bar that's immediately beat by star, basically. But it looks like usually they do get immediately beat by the star when they're printed down there. So... trying not to skip any. I'm looking this one. There we go, right there. So yeah, it looks like sometimes it's not the very next bar. So I may need to adjust that. This actually isn't very bullish. You wouldn't really want to get in here though. See? So in this case, you want to rebid into it. So that's not perfect. Like I said, if it's going to go in the examples, I prefer it to look exactly like how I want it to look. I know I saw some of them recently. I'm sure it happened back then too. Yellow on the down bar. So this one, it seems like they don't get beat right away very often unless it's really bullish. And actually, when it's really bullish, they might not need to be on the bottom. So I might need to reword this. So in this case, they get over it, they come back, and it does not hold as support. I may need to reword this because when it's really bullish, it looks like it doesn't have to be at the bottom. right here. Oh, this one's actually yellow followed by blue. And it was just bullish, but yeah, that's an up bar. Yellow on the bottom. Beat. Bounce. That's how you'd expect it to work. That's how I'd expect it to work. Otherwise, yeah, I don't know how else to describe that. Just want to see when it gets bullish. Are the yellow bars that are beat immediately generally continue higher or no? Yellow bars, bullish. Yellow arrows, immediately beat. Right here. See that you don't want to buy that. Maybe I gotta retool this one. That's the location. So what is it? Trades above it. You do get a scalp here, but it's balanced. See, it's not bullish. Okay, I'll come back to that one. I'll leave it there. Okay, but the better one was the trap back in of the blue bar. So the blue. Okay. So what I believe I said for the bull side. Can I erase this? Just take it away. Okay. So when the arrow is blue and it's on a bare bar, it's not an entry, but it's a sign that it's probably ready to capitulate. And so it's not that you buy the next level, the next buyer, the next buy bar. What you really want is to get underneath that and break out of it and retest. That's what you really want, is this. Is it just above its POC? But there can't be any purple bars over here, purple backgrounds, otherwise that can get in the way. Yeah, see, okay. Hold on, let me see if that's consistent. The POC of the blue bar that's on a bearish bar. Okay, here's another one. So here's the opposite. POC of the yellow bar on an up bar. What it should do is it should create a sell opportunity when it gets under it and comes back to it and then rejects it. That's what should happen. Whoops. First, it's got to trade under with something other than a purple bar. This one just might not work. It's just staying bullish. It can't get under it. So if you can't get under it, it's just bullish until it's not. Okay, right there. Now it's under it. Return to the POC. Reject right there. Is that? Nope. Nope. So we can't wait that long. Okay, here's another one. I don't know if this actually works as well as the other one does. The purple ones definitely work really well. Okay. POC of the blue bar on the down bar. Blue arrow on the down bar. They bounce above it. They get above it. They come back. There's no buyer there. Does it create? No. Okay. So I don't. So the only thing that will work as then is a target for scalp. So you see this one doesn't reach it. This one rips right through it. So that might be working now, but it doesn't look like it works consistently because in this September time, I don't see that necessarily being the like you can get, I guess, a little scalp off of it, but it's not, even though someone was absorbing there, like if you trade under it and you don't save it, like it does not look like anyone cares about that level anymore. So that might not be reliable enough. Let's see if I can find another one. Yellow bar on up, yellow arrow on an up bar, blue arrow on a down bar. It shouldn't happen very often. because they're absorbing the opposite side. It should only happen during capitulation, really. Right there. Okay, so, whoops, jeez. So there's the bar. What I was saying before is this can be a target for a scalp. But what I really wanted to see was whether or not it became support resistance. And here you trade it above it, and it still creates resistance. So it doesn't seem consistent that it flips the market, which is really what I want. So it's just a scalp back. It's a target more than anything. This guy is like a target for exits. Okay. So the other one with the arrows then is when it's a blue on a blue or a yellow on a yellow. And what I said was if you mark off the area, because there's a buyer there, returning to it and bouncing off of it should create scalps, which it does there. And then this one is the sell. It's not a sell right away. It's a sell on a return to the area right there. That one only worked once. This one is here. We get above it. You come back to it. We get under it. This is the big one. This is what I see over and over again. We get underneath the blue one. This one doesn't trigger here with a star or a green bar, but we trade underneath it, and then we come back with another blue arrow. I've seen this in my backtest work over and over and over again. So let me write that one down because this one's pretty good. Okay, so the way we're going to talk about this, we're going to leave that idea with question marks because I'm not totally sure how that works. But here, what we have is blue arrows on bullish bars at support below or bottom of the channel indicate unfinished business. That's where I can spell. Oh my goodness, what did I do? Oh, I see. I had an I in the wrong place. I'm like, I thought I did that right. Unfinished business indicates unfinished business in the range of the bar by a large buyer. The zone, the range. Let's say it this way: if the market breaks below the range below of the bar with the blue arrow and traps back in, which means pops back up into that range and prints a second blue arrow, a significant lift typically follows. Note, this will only work, this will, let's see, purple background bars above the range of blue arrows will continue to act as resistance until, yeah, we'll just leave it at that. This setup works best when the range above the the blue arrow bar is clear of purple. Whoops, don't close. Okay, now I need a picture of it, and then we'll find a. So in this case, we had this purple background bar here, and then we had this one. Yet it still worked. So it looks like it can still work, but it might be specifically when there's a set of them. When the range above the high is clear of a set of multiple bars with a purple background. Okay, let's do that. Because I think one single one seems to be okay, but when it's a bunch of them, it might be a problem. So now let's find. So it was blue bar, trap back below, come back with blue bar. So we need yellow bar, breaks above, falls back into the blue bar, or the yellow bar. So this is the same setup, but we have not gotten over a purple bar, and therefore it fails. This one gets trapped back in here, but see the purple bar is here. The blue bar is equal with it. This one's not even equal with it. Wait, is that what we saw over here too? Is it equal with it? Maybe it just needs to be equal with it. That'd be pretty cool. Oh, it's not. It's not equal with it. Why did this one work? Oh, because we got... No. Why did this one work? Did we get a POC above the POC of this? We did. So maybe all we need is volume above volume. We need the POC line on this bar. Why can't I grab that arrow? We need the POC of this bar to be above the POC of this bar. That might be all we need. Okay, that's something to watch for. Let's find a yellow one. That one does... It's not a down bar. Yellow, yellow. Okay. Oh, no trap back in here. Did not get back in. Did not get back in. So this one trapped back in and failed. Right? So if it doesn't work, it's because it's really bullish or really bearish. And in this case, we had a pink bar to contend with that we could not get. Oh, but look, we have a POC below a POC, look. So it's not just the POC, because the POC of this pink bar is here. And the very next bar got a POC below that. Yeah, so that's not enough. This POC is just slightly below, and that didn't do it. Obviously, it's not going to work every time. How about this one? Did this trap back in? This looks like it. Yep. Okay, so in this case... Oh, and this is perfect because the pink bar has already been beat now. See, this pink bar was not beat, so we couldn't go right away. But it gets... prints another pink bar and immediately gives us another one of these. So that's when it works the best, is pink bar, yellow arrow. Of course, we get pink bar, yellow arrow here, it doesn't work. But because we're trapping behind one, it does. It's interesting that it doesn't happen right away. It's like later. So I might have to work with that. see how if that's consistent or not. Okay, so this is going to be the bear version, and it's going to be just like the bull version, only opposite. So yellow on bearish bars at resistance. Oh fuck, this is not right. No, it is. It is. Resistance above or top. Okay. Indicates unfinished business in the range of the bar by a large seller. If the market breaks above the high, I guess I should just rewrote this. Above the high of the bar with the yellow arrow. And troughs back into the range and prints a second yellow arrow, a significant drop. Pink background bars below the range of the yellow bar. Arrows will continue to act as support. Below. Actually, I think the better way to say this is the setup works best when the second yellow arrow prints below a single bar with a pink background. That's the easiest way to say it, with a pink background. So let me fix, because that's exactly what happened here too. Oh, well, no. Why did this one work so well? It was not the first trap. Not sure. Okay, well, one way or another. We've got some general rules here. So now let's go back to now. Use number of days, load 5. Okay. Let's go back to now. Okay. And chart and all right, so here's now. Ah, we just missed it. Blue bar drops underneath, comes back in, blue bar. What's funny, we're literally just talking about it, and here's another blue bar up here. So here's our first purple background bar. We've now traded above it. If we come back in and we find a buyer here, we should see it lift. Unless it's really bearish. This is our target. We'll see. Let me go grab something to eat. I've been fasting since 7 last night. It's time for me to break my fast. Let me just go grab a protein bar. I'll be right back. It's Glowback. It's not going to sit up right away, but I don't mind leaving the stream on. I might mute the mic if I'm not talking, but I'm going to leave it on in case anyone's interested. If you have any questions, let me know. Like I said, or if there's something you can think of that I should look for, I'm cool looking for. I just kind of want to see if this works real quick. But I don't have anything to do for another hour, so I can watch it, or else we can dig in a little further. Just, yeah, if anyone has any questions or some ideas or whatever, let me know. But I think the purple background bars in particular seem to be pretty powerful. It's a matter of how to match up the arrows with the purple bars, because when you get those traps on the purple arrows, they do, the blue and yellow arrows, they do seem to work. But it might be one of those situations where I've got to figure out one thing and master it, and then add the arrows after that. But I think in particular the purple and pink backgrounds have a ton of opportunity. They seem to work really well, like a ton. I think we found like one that didn't work, and that's on like a random day, and then like all day today they were working too, so we'll see. But yeah, feel free to put any questions in there. I'm happy to do that. Answer any questions you got. All right. So we're getting back into that range of that first purple bar. Now, I'm definitely noticing that when there's a set of them, like 2 or 3 or more, that's usually when they fail. So what we really want is for them to actually get underneath that low and print a single bar with a purple background, and then beat that. But this might still work because I mean we did get clearly a white bar above this one, but I have seen in the back test the average quick the random quick back test we just did. We did the one time when it failed was when it was really bearish like this. We had a set of them like this where it's like 3, 2, 3, you know, and they got stuck. It's like it bounced, but it got stuck here. So it would be like if they come down here and they print a star, it might only get to 11,518. That's what I'm saying. But the interesting thing is we do have that double arrow there, which basically is saying that there's a big volume buyer here who didn't get filled, and then they traveled below him, and he came back and asked for more. You know, we don't know. There's no purple bar in between them, which means he didn't pull his orders. I'm pretty sure. I mean, I assume it's big enough that it would notice that. I don't know exactly how the purple bars are built, but my understanding is that they're on. You know, it requires a relatively large order to be pulled, and they were obviously pulling them here. And so his order must have been like you can see the POC on this bar is like at the low. So a buyer must have just showed up here, and then as they moved up, he didn't get filled, and that's why the arrow showed up. And then they traveled through his buy order, so you'd assume he got filled, and then as they started going up, he must have reloaded, right? And so that's, I mean, yeah, like order flow wise, like that's in my opinion, like if what you're looking for is a scalp, that's a pretty good signal. And you can see on the right, whoops, you can see on the right that they got somebody to sell 58 contracts to them. So I mean, I know that's not a lot, but at one tick, oh, I guess that's like within a 4 tick or 2 tick range. So it might just look like a lot because the ones below it didn't have much. But you can just see that down here there wasn't a whole lot of what's it called, like selling on the bid going on. But here someone hit the bid here, probably right there, and then it bounced. And it's not necessarily the same guy, but that would certainly make sense. That like there's just one dude sitting there. You never know though. Could be, might not be. But what is that? 11,480 something. So currently down there we have like not very many buyers. There's not really a big buyer down there now. The biggest buyer I see down there is 13 at 86. So I wasn't watching it earlier. I don't know if. Oh, now it's 11. Oh, it looks like they've done 13 and there's 11 now. So. Oh, and they did 14 at 91. I don't know which one is him. But just the fact that it's Globex probably means that these arrows are going to be easier to produce. Let's just put it that way. Of course, if they don't get back into that location, then I'm not going to have any more data on the setup because it won't set up. They need to go a little lower, and then we need to see them aggressively defend it. But buying here sure does make sense to me for a scalp back to the midpoint. That's your target for mean reversion. But that trade's over, so you don't want to be trading because you missed a trade. You only want to trade when there's actually an opportunity, an edge. Right now, not that there was one 30 minutes ago. But Globex is just painfully slow. You end up falling asleep. Yeah, look at that. See that? That's him. It's definitely him. Yep. It's not a lot of volume, but okay. I don't know if they're coming back there, I'll be honest. I don't know if they're coming back in here. That could be the low for now. If you look at the candle chart, they opened below and they popped up. I would not be surprised if they like get back to this. Right? Yeah. I think the opportunity was probably right when I was flipping over to this chart. They were printing this pullback, and that was probably the entry right here. Literally missed it by seconds. Oh well. There'll clearly be more. But if it doesn't set up, I'm not just gonna sit here. It takes too long. Globex is too slow. I just thought maybe I could catch one right now. But in the meantime, if you guys have any questions, like I said, I'm happy to dig in with whatever while we wait for it to potentially set up. And then I'll probably come back London maybe. Can't stay up too late tonight. I gotta go to my real job tomorrow, but I mean, it's pretty exciting to find something that seems to work pretty often. It's just a matter of executing it. It's a little tricky, but in real time, it's always a little harder than it is just to do it in reverse. But I think I've got it pretty good. And you can see that clearly these act as resistance, right? This one acts as a resistance very clearly. And then, so you'd think that this one would then act as support if they're going higher. I just don't know if they're going to get through this. Like that, I don't have anything. I don't have any way to figure that out, other than just using the higher time frame, like on the 80 tick. Like that's what I said I would do. I said I would try it on the higher time frame. Yeah, I mean, it would be this. Now this one, maybe you could count purple bars on the 80 tick, because like that's a lot of trading. Like that's like 80 ticks. I mean, that's a lot of points, right? Like I don't count the purple bars on this tiny one because it's easy to print a purple bar without, you don't need a lot of like actual activity to print like 15 points up or down without any, when people are just pulling orders. But on the 80 tick, to get a purple bar to form, it's not all order pulling. Like there is order pulling, but it's, you know, there's still real volume in there. So on the higher time frame, you might have to count those. What about when they're in the middle like this? I would think this would not work as well because it's in the middle of the channel. Okay, so you get above it, and then you'd think if they bounce it, it's good. If they don't bounce it, you can't buy this because now they've gotten under it. Only pink above. That one got above. They just don't bounce it. This one just doesn't set up. So when it's in the middle of the channel, it may be worth ignoring. But I don't think that'll happen very often on anything but the big ones. It's not really meant for this time frame. But here, traded above it. What matters is trading below it. Rejected. It would be a short right here. Doesn't really go anywhere. Gets behind it again. Short right there or there. That one works. It's clearly not always the first time, but it does eventually work. And then here, below it, above it, below it. Yeah, it seems to me like on the higher time frame, it's just not going to do the same pattern of coming back to it to test. So, is that where we are right now? Yep. Look at that. Bounced right off of it. Well, shit. Look at that. Okay. No. Oh. This one. This retested with that star. Right here. Oh, wait. It wasn't above it yet. Retested right here. That one worked. That one worked. This one didn't. Excuse me. So, what changed? Oh, we got another purple background bar. So this one worked. Got another purple background bar. They went down. It worked again. The other purple background bar started to act as resistance. It clearly acted as resistance here, and then it's done. Oh, and then we printed another purple background bar right here. Oh, so even if you ignored the one in the middle, I don't know what the difference is between. Well, I guess just because it didn't go lower, but this one did eventually go lower, and it clearly created resistance. Okay. What if I like scroll back a bunch? This is back to Monday. So these two, you'd really need to get. Now this is the problem: is that on this time frame, you would need to get volume above all of that, and you wouldn't really know for sure it's bullish until here. But once you get it, it's good. Look at that. Fuck. That's good. That's cool. Shit, that's neat. Okay, and then here you'd think it's bearish only if they can develop volume below it. They do, but they don't reject. And then what about, does this one trap you? They need to get below it. Nope, they can't get VPOC below it. Immediately lifts. Come on, get. Can't get VPOC below it. Immediately lifts. Acts as support. So yeah, when it starts to get trendy, they can actually act on the opposite side. See that? They start to act as support. Interesting. Never gets underneath it. Okay. Gets underneath it with a purple bar. Gets right above it. And then here's the one. Here's the winner right here. I can already see it. Oops. It's right at the top. You get the yellow arrow, pink bar, yellow arrow, done. If it comes back up there, oh, no rejection there. Oh, and then they put in another one. Pink bar, orange, pink background, orange bar seems to work pretty well. This one will work better with the arrow. See, trap behind it, came back with the arrow, that's done. See, because it's got another, now the hard part is this pink bar is lower than this. So does it get stuck? Nope, it retests and gives, wow. And then it tries again. And then here, if I focused on this one, we get this, and then we get this, and this. It does work on the 80 tick. Oh, okay. Maybe not perfectly, but conceptually. Nuts. Not, I mean, like I said, I didn't think it would be that straightforward. I wish I could get it to work on I wish I could get it to work on ES.
Order
Oh,
submitted.
fuck.
Order canceled.
Trying to click on. Once again, it's just in a bad spot on my screen, hiding right behind another tab. I did not mean to do that. I don't think it's gonna come back, you guys. I don't think we're gonna get an entry here. Like I said, I'm not gonna sit around for too long and wait for it. But it sure would be nice if we could get it back in here and see if it would bounce. That'd be cool. So slow. I remember I miss, like, I mean, I don't miss the COVID days, but I sure do miss when Globex was wild. No liquidity, just ran all over the place. That was fun. But to be honest, I'm way too busy these days most of the time to. I would miss the fact that I couldn't trade it. Happen to have some time today, but you get the market you get, not the one you want. Will it set up? Or will it just go nowhere? Is it on? I'm connected, right? Boy, oh boy. Falling asleep. Let's go. I might just have to come back at this later, you guys. It's just not even moving. And I really don't like trading this time of Globex anyway, but like I said, I thought maybe I'd get a bounce here and get to see if it could work in Globex, but if it's going to take 3 hours for it to go 30 points, the more I think about it, I don't really want to be in a position. So I think I'll just close it down. Yeah, hopefully this has been interesting. Sorry we didn't get any more trades, but it's been a long one, so I think that's all right. Let's close it up. I might come back later tonight. Otherwise, we'll try this next week. If you got any questions, you can always DM me at